Yo, guys, what's happening? Yo, what up? We have a couple of hundred to come through the doors. Say what's up in the chat. How are we doing? Yo, Chris, what's up? What's up? Yo. Let's see everyone. What's up, Bianca from Milan? Fantastic. What's up, Daniel? Nice, Alan. Yo, what's up? Say what's up in the chat. How we doing? How we doing? Crazy markets. I know. What the hell is wrong with these people? Why do we trade this crypto? It's crazy. It's volatile as hell. It is an insane market. And I think we slightly crazy. I do think we borderline crazy, but we love it, right? We love it. This is the new world. You kind of get used to it over some time, and this is crypto, and ultimately the goal here is to not be afraid of volatility. You know, you can get through these major volatility areas. There's nothing in life you cannot get through, right? Crypto is going to make you strong. It's going to make you emotionally resilient. And you're going to become a very smart and strong emotional person. And that's an important thing when it comes with money in general. Money, we are very attached to it. We are very linked to money. We've got a lot of emotions towards money. And crypto kind of tells you to not be so emotional when it comes to these type of things, because the emotions is kind of what makes mistakes and we kind of overreact at times. So first question I have, Papa one in the chat, if you have more money in crypto than your bank account, I want to see. Who has more money in crypto than I can see all the ones. Who's got more money in crypto than the bank accounts? Of course, yes. Okay, it's probably half the money now, but it's okay. We'll get that back. But nonetheless, exactly. It's quite crazy, and we've done a lot of stats before, and we've seen those that have had more money in crypto, and it's crazy how they've actually had more money in memes and all these type of things. And it basically just shows you that, the emotional attachment to money is crazy when you see the figures going up and down, but actually you don't really care about it, right? It's because if you're willing to just put it in anything in the desperation of being rich overnight, that's the problem, right? It's just going and just putting it into anything. And this is the a big lesson you're going to learn within crypto is yesterday when you saw the market pull back, right? When it comes to your long-term portfolios, majority of decent amounts of cash, must be in Bitcoin. ETH dropped a bit hard, but ultimately, by holding Bitcoin, holding ETH, you're gonna hold the downside a lot better. And when the market's ready to go up, you take on some altcoins, and that's the big difference here. Those that were very exposed to memes, would have taken a lot of damage, and maybe in the AI tokens, all these sort of things. So over time, you start to get a lot more mature with where your money actually goes, and you start to respect it a little bit more, which is super important. But it is crazy to see how a lot of people do have more money in in crypto than their bank accounts. Guys, how are we doing? Today, I have a masterclass for you. I have charting. Today, you're going to learn where to put your damn buy zones. You're going to start to understand my shows a lot more. The goal is not to watch Sheldon and he's a genius because where he can look at these zones where we're going to bounce. I'm going to show you everything, right? So I'm going to show you every single way, the way I calculate where to buy, where to sell, when to long, when to short, all these type of things. I'm going to teach you every tool that you need to do to do that, right? The only thing that gets a little bit difficult on your side is the risk management. How much money you put into these things? How diversified are you? How conservative are you? Do you always keep a bit of cash on the side? These are important things for you to learn outside of trading. But the main purpose of today's stream in specific is to get your charting on point, right? Just to really understand charting, how to find these zones, and how to know when to catch these dips. When the markets are tanking, it's so scary to buy, okay? But you got to trust important levels. And I'm going to show you how to detect these levels. And it's the same thing with selling. Selling is harder than buying, right? Buying is pretty easy. Two big green candles and we all want to buy and get into the market, right? Selling is the hard thing because when you're in the tokens, you had a game plan when you started. You said, okay, I'm going to be happy with 30% move. And then it gets to 30%. You're like, oh, it's going to be 60%. Then it gets to 60%. Then it's like, oh, 100%. And you basically start getting addicted to the gains and you end up never selling. So the next thing that's also important that to learn in today's stream is how to set take profit areas, right, of where to take profits. And the best time to set take profit areas is on big red days, right? When you're basically looking to enter the trades, or you have been in your trades and now the markets are going down and you're seeing the downside and it's getting you stressed. When you are in that emotion is the best time, because I like to say you are sober. You're no longer drunk on the greenness, right? Because I like to, again, I keep resonating, I keep saying these things of drinking, right? It's like we get drunk too quickly. And that's why we don't get to see things clearly. And we've all had those nights where we drink a bit much and we just don't see things properly, right? We don't think about things much further than those couple of hours on the good night that you're having. And it's the same thing when the markets are rallying to the upside. You get drunk on making money. And when you get drunk on making money, you tend to fiddle, you tend to change your ideas, you tend to jump too quickly, and the market smells it. It smells that specific time, and that's where it comes with these crazy wicks of wiping out. It either comes when the market's been choppy and it wipes you out, or when it's been pumping really hard, a big wick comes at any single time. So the important thing to understand is you're going to learn the TA skills now of where to take profits, where to be buying, and it's important to know when to be doing these things. So when the market has come down, you have a lot of work this week to actually go to your weekly charts in your long-term portfolio and to get ready on taking profit levels, to actually set them up, okay? And to do it when you're in a, all you have to do after that is stick to the plan. That's it. If you're going to fiddle with the plan, you're going to fiddle with the results, right? What is the result here? The result's to make money. The result's to start an incredible financial streak. That's what it's there to do, right? So that's the goal. That's but the moment that you tweak or you fiddle with things along the way, you're changing the outcome, right? You're changing what's going to actually start to happen. So by learning these skills today, you're going to really get to a point of knowing a really good exit strategy for the bull market for your long-term portfolio, right? And you're also going to know when the markets are coming down hard. Okay, you're going to learn to also trust the levels of what thing. And I'm going to show you guys why it's so important. TA for me was the best thing for me to get into crypto. The reason is I can be quite emotional, right? And I can be very emotionally attached to my money. And TA basically just told me what to do. If I disagreed, if I didn't like it, it didn't matter, right? TA was just telling me the truth, and if I wanted to believe it or not, it was my choice. And if my ego stepped in and I decided, no, but this thing is going to the moon because Elon Musk said it's going to go to the moon, right? But your trend line is breaking and your RSI is at the top. As much as I had my own belief, the chart was telling you, hey, there is weakness in this price right now. There's volume that is coming in that's going to bring this chart down. So as much as you have your opinion of how big things are going to go, it may be lying to you. And that's why TA was the easiest way for me to find the most honest way to make money in crypto, okay, and learn how to get good at it. The biggest problem with crypto is when it comes to jumping on Twitter, jumping on this, people are saying these things all over the damn place, right? And it can really get your imagination going. And you can't rely on that. You can't rely on an opinion of how high this thing is going to go. You got to rely on some sort of data or some sort of structure. And TA was the easiest way. When I came in, I said, what's the honest way that I can get real data? Real data and real things that are happening. Once I know the most honest and easiest way for me to invest and buy and sell and trade, okay, then I need to get good at that. And that's what TA was a big thing for me. Now, the next thing that's also important, guys, to understand that if you are a long-term investor or a day trader, you are a trader. It's a long-term trader, medium-term trader, short-term trader. Okay, so all the concepts and the tools that I'm teaching here work in all aspects. They work for investment entries, investment exits, day trading, all of these different tools. They are the same thing because remember what I spoke to you guys about last week is the emotions imprint on all different time frames. Okay, the same emotions play out. When you are a day trader, you're waiting for blood, right? You're waiting for the market to have a decent short-term correction, have that big one or two candles, start to settle, go slowly. That's where you're getting ready to take the trade, right? When it starts to rally slowly up and then starts to speed up, that's when you're getting ready to take the profits. Why? Because when the market was coming down, you saw the panic, you saw the capitulation, you saw the anger, you saw the depression, you saw it all play out on the 1 hour chart. When you see it going up, you saw the happiness, the excitement. You know, you saw all of that play out. And again, it's the same way with your day. If you wake up in the morning and you didn't sleep well last night, you're already quite grumpy. Then you get up and there's no milk for your coffee, you get a little bit more grumpy. Then you jump in the car, you go to work, okay, and then you're sitting in traffic. It starts to add up more. Then you get there and your boss gives you a bunch of crap, add up more. And it just starts to get more, and it accelerates. And that's how we are as emotional human beings, is things start to accelerate. So when you start to get the speed up to the downside, you're paying attention. Okay, and the very important thing to understand as well is when the prices are falling down, okay, it's important not to catch a falling knife. What you are waiting for is you got to understand that dropping or pumping does not make people lose interest, right? It is when it goes sideways is when people lose interest. And that is when it gets depressing, when people get bored, right? And they start to overthink and they start to over-exaggerate and they start to get tired and exhausted. That is the biggest thing. So when something is dropping, you got your areas of where you want to slowly one or two buy, but where the real buy signal is when it stopped dropping, okay? Then you can pick it up. And they say it's like a knife. If a knife is falling, you try to catch the knife, you're going to cut your hand. But if it drops and it falls down on the table and you pick it up, then you're not going to cut your hand, right? And that's exactly what it is. So again, let's jump through a couple things. Are you guys ready? Can I have ones in the chat? You ready for the TA? You ready to learn how to chart like a sniper, right? Let's see, let's see, let's see. Ones in the chat, ones in the chat. Fantastic. Ones are rolling. Brilliant, brilliant, brilliant. Let's go. Okay. So first thing, let's pop up over here. So what I'm going to teach you now, I'm going to teach you all the tools, right? I'm going to go through all the tools. In the course, you learned RSIs, you learned trend lines and these type of things. I'm going to take it to another level now and really go a little bit more into depth of each of these things. Then what we're going to do is we're going to teach you how to be a robot. We're going to teach you how to build a formula that is not emotionally attached. It's basically telling you what to do. You can jump on, put the chart on, look at 4 things. If they correct and you can tick all 4 boxes, you can take the trade. Okay? If you tick all 3 boxes, you can take profits. You're basically going to automate your trading. You're going to work hard on this once, okay? And you're going to build a very simple system that you can become accurate and you don't have to put a lot of time into it. People that want to stare at charts is a great way to learn in the beginning. But over time, you learn to not look at the charts. You learn to not waste energy on the charts. You are paying attention to when it is worth paying attention, right? Otherwise, you're just staring and you're basically wasting your energy, which is super important. Once we have these tools and you have an understanding of all these tools, we put these tools into a 4-step method. And this 4-step method is going to teach you, again, 4 boxes on when you're allowed to buy and 4 boxes on when you're allowed to sell, right? And then what we're also going to do is you are not just going to prepare yourself for a bull market. You're going to prepare yourself for a bear market. You're going to prepare for yourself for a sideways market as well. So we're also going to create a 4-step method to make money when the markets are coming down for many months. Okay, and to make money when the markets are going sideways. And you're going to create this 4-step method that all you have to do is choose the exact time frame. And let's have a quick recap on the time frames. You remember the time frames, guys. Let's jump in here and just remind you guys of what the time frames actually look like. Can I have a thumbs up from Jiv, from team, that we can see the screen? Okay, fantastic. So let's go through the time frames, which is super important. So here's the time frames again. Remember, if you want to make some money the next 24 hours, the 1-hour chart's your baby, right? If you have a job and you don't have much time, but you want to make some money, once a week, you want to take a trade, no problem. The 4-hour chart is yours. If you want to only trade 2 times a month, the 8-hour chart is yours. The 12-hour chart is for the areas of 2 times a month, and the daily is if you want to do 1 trade a month, right? Or 1 trade every month to 2 months, and the weekly is 1 trade every 3 months, and the monthly is obviously higher, right? 1 trade a year, these type of things. So by now knowing the different time frames, it's very important to understand, okay, cool, that if I want to make money in a certain period of time, I must just look at the data that I need to make the money, because I don't really care what happens next week. I don't care what happens next month. I want to make money in 24 hours, right? And what that's going to do is going to remove the confusion. It's not going to make you overthink, okay? Because a lot of people have uncertainty of where's the world going in the next 3 months? Where's it going next week? Where's it going tomorrow? Okay? It's going to start playing with your head. You're going to be like, I want to go long now, but Trump's talking tomorrow. It doesn't matter. It matters of what's happening in 24 hours, and you're going to look at 1 RSI, you're going to have 1 set of trend lines, 1 Fibonacci, and 1 other tool, right? And if you have all these 4 there, that's all that you need to take the basic trading to know, should I be longing? Should I be shorting? What should I be doing? Right? The next thing that's also important to do is now that you know, okay, I want to make money in 24 hours. Okay? So now you go to the 1-hour chart, and the first thing you have to do is look at, is it in an uptrend? Is it going sideways? Is it in a downtrend? And the way you determine it is the green bigger than the red. It's in an uptrend, right? Is the red bigger than the green? It's a downtrend. Is it the same? It's a side trend. Once you know that, you're like, okay, it's a side trend. Let me go to my 4-step method on side trend. This is when I'm allowed to buy, this is when I'm allowed to sell. Okay, so you start to automate and you start to make it very simple for yourself to do so. Okay, so the whole concept here is to basically automate and to make this very easy for yourself so that you don't have to rely on your opinions. You rely on these things. And here we go. You're looking at the direction of the market. We're building a 4-step method on when to buy, when to sell in a up, down, or sideways market over here, and time frames. By the way, you get all of this, and you can print these things on your wall. They're going to help you a lot. Now, what's also important to understand is you are going to create the 4-step methods. More than welcome to use my 4-step method, okay? But there's other things you resonate to as well. I see a lot of people with different indicators, different things. It doesn't matter, okay? When you want to make a 4-step method, you're thinking of a few things. The first thing is risk to reward, which I taught you guys last week. If I enter this trade, is my reward 3 times worth my risk? Okay, if I buy something in the middle and it can go down 20% and go up 20% to the next levels, it's a black and white, black and red, it's gambling's mentality. You've got a 50% chance, and it's not worth it. So when you're thinking about a 4-step method, you're thinking about something that is keeping in mind your risk to reward. This is why I love a RSI, right? A RSI tells you only get ready to take a trade when it's at the bottom. Why is it telling you that? Is because in order for the RSI to come down, it has to have a bunch of red. And it's teaching you that let red candles appear, then get ready to buy. Let green candles appear, then get ready to sell. It's teaching you the basic understanding of buy the red and sell the green, right? So when it comes to the 4-step method, that's why it's important to put these 4 ingredients together that really have an alignment of your risk to reward, which is super important. So let's jump straight away into the TA and let's go through a couple of things and then we're going to add it all together. Can I confirm again, Jiv? You can see the screen. Okay, cool. Now, let's jump into some TA. So I'm going to start off with some trend lines quickly because I want you to understand trends. There's a lot of question around trend lines. Which trend, Sheldon? I draw many trends, all these type of things. Trend lines are basically tracking momentum. They are non-predicting tools. Okay, they're not telling you that Bitcoin's going to go to $100,000 and then they're not. They're basically tracking the strength of the token. Okay, so if a token is going up, you're putting a trend line at the bottom to track it going up. And if it starts to lose the bottom trend line, it's telling you something is going to change and the current move that it's been having is going to shift. Something's going to happen. So it gives you an early warning sign that, hey, your coin was looking good, but it's breaking a trend, okay, and it's not looking so good anymore. Okay, and then you have the choice then, okay, up my stop loss, take some profits, protect myself. And it's the same thing when the markets are coming down. When the markets are coming down and you're afraid to just go in and buy a token, what it's telling you to do is, okay, it's going to go down. Allow it to go down. Allow it to keep chopping. But when a trend line breaks all of a sudden, it's telling you that something is shifting and something is changing. That is the time where you want to pay attention. So why this is so powerful for me is because it is a non-predicting tool, and it was one of the biggest ways that I made money in the beginning, right? Because I got so tired of predicting. Okay, predicting is very hard because you can get it right, and we've seen it with me. You can get it right for weeks, and then Trump will talk, this will happen, and TA goes out of the window at times, right? Because the volatility starts to kick in. Okay, so the trend lines for me was instead of predicting, wait for something to change. Wait for an early warning sign of something to happen, which means if I'm busy with my day, okay, and I can clearly see that this token is moving to a downwards trend, I'm not going to go buy it now because I know I can get chopped up. However, I can put a line and I can put an alarm on there and I can go continue with my day. And when it's ready for me to trade, the alarm will go off, ping me a email, tell me, hey, this token's about to break trend. Now I go and I go pay attention to the trend. Okay, so it's about working smarter, not harder. But let's go through the trend lines over here. So trend lines work very much like this. They are stronger with the more touches that they have. Okay, so the first thing we must understand is when the token is going down, we are putting a trend line at the top, right? Why? Because you can see very clearly over here that all you are basically doing with one simple line is you can see that this token is doing lower highs and lower lows, indicating that the token is going down, right? Lower highs, lower lows equals it is in a downtrend. When the market is going up, it is indicating a high, higher high, higher lows, okay? And all of a sudden, when that starts to change, then it starts to do the lower lows, lower highs, and that's what it basically is. That's all that it is, right? And going back here to the charts, you can see it very clearly that when a token is doing higher lows, it's going up. So here's an example over here. There's a low, there's the higher lows, it's going up, right? And so what happened? First lower low over here. First lower high over here. You see there? So going up, you could see the higher highs, and you can see the higher lows, and that resulted in Bitcoin going up. Okay, the moment that there was a little bit of weakness where the first time we put in a lower high over here, just move us over, what did it result in? A lower. And then the next time a lower high, what did it result in? So you could see by having lower highs equals lower lows. Okay, and then all of a sudden here, We have a higher low for the first time. What did that result in? A higher high. Okay, so all you're doing is you're basically tracking the higher highs and higher lows. Okay, so when the tokens are coming down, I love to put the trend lines at the top. And what it's basically telling me, for as long as this token is doing this, I'm just tracking it. But the moment that it does this, and it gives me that first sign that it is changing from lower highs to higher highs, higher lows, that's where I want to get ready to buy the token. That's where, because something is shifting, something is changing, right? Now, going back over here, when the markets are coming down, I like trend lines at the top. When they are going up, I like trend lines at the bottom. This is one of the simplest ways to get good at this market without predicting it. Now, the next thing that's very important, that's going to determine which trend is the best one to use. It's the one with the most touches, okay? So if your token has only touched twice on the trend line, it's a valid trend line, okay? But it's a weak trend line. It is telling you that this is a 50-50% chance that this trend line is correct. Okay, because it's only got 2 touches. That's the amount of data that it has. Okay, and it's a 50-50 chance that you're gonna get it correct. That once it breaks this trend, it's gonna go up, right? Then if you have 3 touches, this is more strong. You've got a 60% chance of average. If you've got 4 touches, it's strong. 70% chance it's gonna be correct. And the highest probability you get is 80%. Right? And I've tested this many times by getting, if you trade only trends that have 5 touches, you'll win 8 out of 10 trades. You will get them correct in catching the breakout. Okay, so here, if you get 5 touches, very strong. Same thing when we're going to the upside. Okay, if it's only 2 touches, it's a weak trend. Okay, if it's 3 touches, the average trend. If it's 4 touches, it's a strong trend. If it's 5 touches, it's a very strong trend. Meaning that if you are holding a token, okay, and it's going up, and you have this good trend line at the bottom, it's got 5 touches, and one day it breaks that trend, this is a very strong sell signal. It's a very strong take profits, save some money, because this is a strong trend that if this breaks, it's very likely this thing's going to start tanking down. Okay, so by understanding that, now you know, okay, what trends am I looking for? I'm looking for strong trends. So for example, on Bitcoin here, this was a very good trend, right? This was the trend where it was 1 touch, 2 touch, 3 touch, 4 touch, 5 touches. Look what happened the moment we broke it. Skyrocketed. Right? So the touches are very, very, very important. So again, what that means is if you want to make money for the day, people ask me, what coin should I trade? What coin can you find that has 5 touch trend line? That's the coin you should trade. Make sure it's got volume. Make sure it's at least the top 150 coins so you can get in and out very easily. Trade that coin for the day because that one's going to give you the high probability of winning. Okay? It's not about what coin you want to trade. It's about where you're going to win. Okay? Where you're going to make a lot of money. So if you go through all your coins now and you're on the 1 hour, find a damn coin that has 4 to 5 touches. That's going to give you, and wait for that trend to break, and that's when you're going to get ready to trigger, right? And that's how you're going to win a lot more than just what coin should I trade. You know, it doesn't work like that. It's about what's going to give you the best probability of winning. Okay, that's the way to play it. Okay, now next thing is let's go down over here. This is exactly what it is. Okay, when your token's going down, you're tracking trend line at the top. When the token's going up, you're tracking it at the bottom, trend line. And this is a strategy on its own. Okay, if you wanted to trade these sort of things, meaning that when it breaks here, you're going to buy, put a stop loss over here, right? When it breaks the trend, you're going to take profits. Then you're going to wait for it to go down again. When it breaks the trend, you're going to get in again. And you can just trade the range, right? As this token's moving and going up and all these type of things. That's a strategy on its own as a day trading. Just clear up the charts a little bit here. 2 secs, just get rid of all the drawings. Cool. Okay. Now, next thing over here is let's go through a couple of patterns because this is very important to understand. The patterns mean a lot, and you've got to read the picture and understand the picture. So remember, the important thing is emotions are playing out everywhere. When a token was going sideways like this, there was emotions playing out. When it tanked over here, there was a lot of fear that was happening, right? There was a lot of panic that was happening. And when the token slows down, okay, you got to pay attention to the pattern that is being formed because you are being lied to, okay, when you are feeling these emotions. When the market has come down 60%, and I saw this yesterday on yesterday's show, I put a poll out. I said, guys, are we bullish or bearish today? You know what the poll was? 60%, 60 to 70% was bearish yesterday. You know, I put a poll out today. Guess what it was? 60 to 70% bullish, right? This is the problem. When the markets are coming down, okay, what you don't understand is there are bullish patterns being formed. When the market is going up, there's bearish patterns being formed. So that means when the markets are green and going up and slowing down, you should be bearish. When the markets are going down and slowing down, you should be bullish, right? People get it the wrong way around. They kind of, oh, the market's come down 60%. Now crypto's bearish, right? And that's the big problem. So these patterns, when something is slowing down on the emotional chart, is exactly when we are looking to be buying or starting for trades. So what I love to see is when a token falls down and has these descending wedges, and let me show you what these patterns look like. You have two types of patterns, guys. You have reversal patterns, okay, and you have continuation patterns. Now it's very simple. Okay, a reversal pattern is when a token's been going up, does a certain pattern, and it comes all the way down, right? There was a pattern that happened before it came down. Okay, and that's a reversal pattern. Then you get continuation patterns. Okay, and what a continuation pattern is when something goes up, goes like this, goes up, goes like this, up, and goes like this. So there's a pattern that tells you that there's going to be another leg similar to what just happened. Okay, it's important to understand the two. Okay, because if you don't, if you think that something is a continuation pattern, but it's actually a reversal pattern, you're going to get caught very quickly and very hard, right? So here is a common differences of patterns that you will see. Reversal patterns look like this, okay? When they go up and they go sideways, okay? Now, the important thing is there's a big difference between this and this over here, and it's one line, right? If we go up and we go sideways like this, okay, it can actually mean that it's bullish. However, we have a direction that the token needs to make. If the token breaks the bottom line, it's a reversal. Okay, telling you that just as fast as it came up is as fast as it comes down. Okay, so a lot of people will get bullish like this, and you have the right to be bullish, but you have to break this line to confirm it. This is why I love trend lines. If it does not confirm and break that line and it breaks the bottom line, it is a reversal. And it's the same thing when the market comes down. The market comes down like this, you'll have a line at the top and a line at the bottom. Okay? And if it breaks the bottom, then what it's going to do is it's going to do this. A continuation. It's going to continue, which means that where it came in, it went sideways and it continued on the way out. Right? So, but the difference here is it's the same token goes sideways over here. It needs to break the top line. If it breaks the top line, it's a reversal. If it breaks the bottom line, it is a continuation, okay? Which makes it so much easier to trade. Now, why am I saying that? Is because if this token drops over here and it's going sideways, and now you're like, okay, Sheldon, it's in a depression phase. This is where I want to open trades. It's so easy to know where to protect yourself. Because if you're going to buy here, you know that if it breaks this line here, it's going to go down another leg, and then you get to buy cheaper. So it means this is where I put my stop loss, right? It's very easy. And if it plays out, it breaks the top trend, whoa, you're making the money. If it doesn't play out and it breaks this bottom trend here, you'll lose 5%, but you'll end up buying something 20% cheaper, which will result in more money when the market goes up again. Okay, you got to understand something. Crypto is going to go through days where it is giving money and when it is taking money. When it is taking money, it's crucial for us to not lose too much money. You are going to lose, but you need to be losing way less than what you're making when the markets go up again. So there's nothing wrong with attempting. You know the real stats of a good trader is 3 out of 10 trades, and you're a great trader. If you're getting 4 to 5 out of 10 trades right, you are a phenomenal trader. Because when you're making the money to the upside, you're making 3 to 5 of your reward. When you're going to the downside, you're taking haircuts. Taking a 5% haircut, 5% haircut, 5%, but your one win is 30%. Okay, so one win is worth 5 losses. Okay, so that's why when the market's going sideways, I'm buying here, putting a stop here, and if it breaks down, I get to buy 20% cheaper. It's more money to the upside when the market goes up again. Okay, so there's times where the markets are giving you money and when they're taking money. So here, again, keep these in mind and draw them and put them on your wall, right? Print them, do what you ever got to do. Understand that when a token is going, okay, and I'll show you a couple here. If a token is pumping up and it goes up and it goes sideways like this, it is bearish. It is not bullish, okay? Where a lot of people think, oh, but it's going up. It is telling you that the token was getting super excited. Now it is slowing down, okay? And when it's slowing down, okay, it's telling you that, hey, something is happening. It's not, remember, if a token is moving fast, it's going to continue to move fast, okay? But the moment that it starts to slow down, it is giving you a warning sign. It is telling you, hey, something is shifting. And this is what it is over here. And the moment it breaks that trend line at the bottom over there, that is your signal to say, hey, take profits or move your damn stop loss up now because the market is going to reverse. And it's the same thing when the market is dropping to the downside. When the market's dropping to the downside and it is slowly bleeding like this at an angle, this is bullish. And the moment it breaks this trend over here, this is where you really want to enter a trade and start to get. Why? Because your risk is so low. If you take here and you put your risk to reward tool on over here, this is the lowest risk you get. Look at that risk and look at that reward, right? Just back to the top, you can see the amount of green, and just at the bottom there, you can see how little the red is. Okay, so that is the thing. And this is your continuations, and this is your reversal patterns over here. So again, when you see a token dropping and going up like this is a continuation. This is telling you, hey, yes, your token is going up again, but it is not strong. If it breaks this trend over here, it's coming down, right? So let me go over here and show you guys on the actual chart what this looks like. So there is your trends. Let me show you the pattern so you can see it very clearly. Okay, so let's go through this cycle over here. This time, most bearish time in crypto you get, right? Bitcoin was the $17,000, $18,000 range. What people don't understand, though, is look how this was the big panic and the capitulation, and this was the depression, right? After depression comes what? Disbelief, hope, and it was the damn bottom. So the first sign that you saw over there was you saw that the pattern that was here, when everyone was bearish, it was forming a bullish pattern. Okay, and if you got that damn buyout over here, you'd be sitting right now with the lower Bitcoin. Okay, and the same thing when you go to the Solana chart, and this is where you would have caught it at 12 bucks, 12 or $13. So again, it just proves to you again that when everyone is bearish, you need to be looking for the bullish pattern that's looking to play. So this is known as a reversal pattern, is this one over here. Okay, and it's the same way that was the top of Bitcoin in the last cycle. When Bitcoin started going up, it started to go slowly to the upside. Okay, and this is a reversal bad pattern, okay, because it basically pumped and it went slow to the upside, okay, and the moment that it broke the bottom trend over here, look what happened. The whole market reversed, okay. Then after that it reversed, so everyone was bullish here, then the market came down 50% and everyone is bearish, but in that bearish time, look at what pattern was forming over here, okay. I did this on the daily chart. That's why you might see wicks here. So if you go to the daily, you'll be able to draw the trend lines. Okay, but look at this. When this was going at an angle, this was the time to be bullish. Okay, so when everyone is bullish, the chart prints bearish. Whenever everyone is bearish, the chart prints bullish. This is known as a reversal pattern. Look at this time on Bitcoin over here. Reversal pattern, reversal pattern. Okay, now what you get next is continuation patterns. Okay, and a continuation pattern, and this is the difference between bullish and bearish, okay, is when your token is pumps up, and it goes up like this. I don't know why it does it like that. Let me do it with my keyboard here. When a token is pumping, that's so weird, and it goes up slowly like this, that is the bearish sign, right? When a token, though, pumps, and then goes down slowly like that, this is bullish. Okay, now why this is bullish is because the RSI at the bottom, you know that RSI that's going up and down, right? By this token going slowly like this, it is getting the RSI to reset. Okay, and by the time that this token looks to go up again, it is not exhausted. It actually has an oversold RSI and it's ready to go up again. Okay, where the difference between a token that has basically pumped and going up at an angle like this is that RSI that went up is just staying up there. It is staying at an overbought territory over here, and it's telling you that this is not healthy. This needs to come down, and that's why the token ends up dropping very much over there. So a continuation pattern is when a token comes up, goes either sideways or at a slight down angle, and breaks the top over there. It's telling you that it's coming in, slowing down, and breaking out. That is known as a continuation. Now to the up or the downside, and I want to go back over here and just show you that this is same thing for the downside. Where is it over here? There we go. Downside, right? If a token comes down and goes sideways and exits that trend line, it's going to exit in the same way. So going back over here again, here's the continuations over here. So again, we dropped, we went sideways to an up angle, broke the bottom, we continued down. That's a continuation pattern. When we dropped, we went sideways, we broke the bottom, continuation pattern. Then we dropped, went at a different angle. You see the difference. It is not going up, it is going down. Reversal pattern. We went up, sideways, same highs, same lows. That is a flag. It's called a bull flag, right? We exited, we pumped. Same thing with Bitcoin over here. We went sideways for 6 months, we broke the top, and we shot up. Where's Bitcoin right now? It's making a sideways flag. Okay, so again, if this decides to break the bottom, it's a reversal pattern, and it will go to 76 to 72 to 76,000, right? If it breaks the top, it's a continuation. So right now, it's so simple that as an investor, I'm not going to sit there and go sell my long-term bags. I need to first understand that this thing is going sideways. And only if we lose this trend and start, then I'll think, okay, maybe I should protect some capital. Until then, this is a continuation. Okay, and a break of a trend will really make sure for me, or really excite me to make sure, hey, that I have all my positions in and all these type of things. Can I have ones in the chat? You got it. I can move on to the next part. One's in the chat, one's in the chat. So it's so important to know when the market has been dropping aggressively and going sideways, it is getting bullish. Get ready to long the market. When the market is pumped up and going sideways, get ready to take profits or short the market. Okay, and that's already going to teach you something that 90% of the market don't get correct, is they don't know to be bearish when the markets are green and to be bullish when the markets are red. By just having that little key alone, you are already putting yourself in the 20% category of this entire market. Okay, now the only next important thing to understand as well, okay, is the time frame. So here I just showed you the weekly time frame. What does that mean? You know, this is if you want to look at where's Bitcoin going in the next year, right? High time frame. You're looking at, this is your investment part of your portfolio. But now the same thing happens on the different time frames as well. Okay, on a 15-minute chart, 1-hour chart, the same patterns will play out. Okay, and also you have the trend lines and you have these patterns here, and you also get a couple of other patterns. Right? So you get things like head and shoulders, double tops, bottoms, all these type of things. So for example, when we had these trend lines over here and Bitcoin was going up at an angle like this, it was a bearish pattern, but it was also doing a double top over there. You see how it hit the same area and never got through it? That's known as a double top. That's called a reversal pattern. Okay? Plus, there was a head and shoulders. You see the head and shoulders? That's a reversal. So that is why I love trend lines, because inside of this, you will see these patterns. Right? And you can go study all these patterns. I loved that I could just put up a damn trend line and it gave me all the answers anyway, right? Which was great. Okay. But nonetheless, there's a double top. Here's the bottom of Bitcoin over here, a triple bottom, an inverse head and shoulders. That's bullish. Okay. A double top, a double bottom. And then you get something which is important. And this is what I see Bitcoin doing right now. I see Bitcoin's pulling back, and I want to show you guys the plan and the structure of what to look at now for Bitcoin. You get a W pattern. Okay, and a W pattern is basically showing you when a big move has happened, when the fast acceleration has happened. So for example, here is your token and it's slowly grinding to the upside. And all of a sudden it speeds up, right? Then what happens is it hits a rejection point and it tries again. And if it doesn't get a higher high and it puts in a lower high, that is your first signal that things are changing. And what it does after that is it does that, right? And this is known as a W pattern. It is known as you get the first push, and if we don't get through the next time, this is a reversal pattern. It's a lower high W pattern. Now, it's the same thing when the token is coming down, and I want to show you this over here. Token starts coming down slowly, slowly, tanks, boom, goes up, higher low, W pattern. This is exactly what I see happening on Bitcoin right now. Let's actually go to the Bitcoin chart over here, and let me show you. So there's the 5-minute chart. Let's jump here to the 4-hour chart and show you guys here. There we go. Okay. So again, what happened? Massive drop off quick. So what am I looking for now? Token to come down. It's going to come to a fib level that I'm going to show you guys now shortly. Okay. And all I'm looking for is a higher low, and that will be a reversal pattern, and Bitcoin can go up again. Right? It's known as a W pattern. So I'll go over here and I'll just show you on the chart on Doge. That's what we're looking for now. Looking for price to come down lower over here, then the market gets ready to go up again, right? A W pattern in play over there as well. Okay, now, next thing over here that I want to show you guys, Fibonacci's. Fibonacci is very important, okay? Because Fibonacci's are basically going to show you how strong your token is right now in the up, down, or the sideways market. It's going to tell you how aggressive your token is actually being, okay? So the first thing to understand is the Fibonacci is basically these numbers or whatever it may be, but it basically shows you the strength. Okay, so the first thing, remember, if you want to draw a Fibonacci, you need to see a clear bottom where the token started going up again, because before this it was probably either going down or it was going sideways. Wherever you can see the clear bottom where this token started going up again, and wherever you can see the clear top where it stopped and it started going down, that's where you're going to draw your Fibonacci. You're going to take a Fibonacci from the bottom and you're going to take it to the top. So the big circle to the small circle, if you want to determine where it's going to bounce over here. Okay, now remember what this is basically showing you is it's showing you that this token now has had a strong pump up. Now it is coming down and you want to buy it in a safe area, in a good area. So Fibonacci is going to give you levels and show you different levels of where this token can bounce, right? And then what you're going to do is you're going to take other tools and you'll add it to it. But let's continue the Fibonacci. So again, you take it from the bottom to the top. So for example, here on the left or chain link, from the bottom to the top. I didn't get the full bottom there. Hold on. There we go. Okay, the bottom to the top. So again, the clear bottom, clear top. And you can see exactly where we hit, right? This would have basically told you that if you wanted as an investment to buy this, just put some limit orders over here because this is known as the best entry, 618. But let me explain to you how this works. So when you put in your Fibonacci, you will see all these different lines. And let me put them up here for you so you could see them. There's a line, there's a line, there's a line, there's a line, there's a line. Okay? You can actually remove some of them if it gets too messy. But all of these different lines are here. And all that it's basically telling you is how strong your token is in a certain direction. How strong is the momentum of that token right now? Okay, so what does that mean? That if it pumps up and it holds this one, it's very strong. If it's here, it's strong, it's average, it's good, and it's not so great, right? Over here. Let me show you what this looks like. Your token is going to go up in different speeds. Okay, so remember 2 months ago when Doge was going, when it did like 300%, okay, but another token was only doing 100%, okay, that is showing you the momentum of the token. Some tokens are moving up like this. This is important to understand because again, you're gonna know how to trade the token when you understand how strong it is. Okay, some tokens will pump and pump like this. Okay, some will pump like this. Okay, we've seen this. We've seen how some tokens lag and all these type of things. The Fibonacci is going to tell you this. So again, if your token is going up and it's pulling back and it's holding the 382 or the 236, it's telling you that your token is aggressive, which means your pullbacks will be quick and they'll be small and they won't last long. Okay, which means if you want to buy, you need to know that your token's in an aggressive range. So don't expect strong pullbacks. Expect to buy this thing on a quicker pullback over here, okay, because it's in a strong momentum. It's telling you the difference. Where another token, as example, that is pulling all the way back to the E, which is the 0.786, okay, that's telling you that, hey, this token is moving like this. So if your token just starts turning over here, be patient. Put some limit orders over here. This token's moving in a slow angle to the upside. Now again, this token will start off slow and will probably speed up later on. But it's telling you what this token is in and how it's moving right now. Now again, over here, it's the same to the downside. So if you want to see when a token drops and you want to see, okay, where's this thing going to stop dropping or anything like that, let me just move this over. Give me 2 seconds. Okay, it's like this. So all of a sudden your token has been going up, and now it drops. Now it's going to come up and it's telling you, hey, this thing's in a down pattern. To know where this is going to be, you can take a Fibonacci from here to here and it will give you the numbers in the opposite direction. You could see this over here. You take a fib from here to here, and again, if your token is going to drop like this, it's going to hold this level. If it's going to drop a little bit less, it's going to hold this level. Okay, and this is important to understand. Again, it can be quite powerful by itself, but it's very powerful when you add this with a bunch of other tools. But this is basically what the Fibonacci is telling you. It's telling you what momentum and what strength your token is currently running in or sitting in at this point. Now, next thing over here is now we start adding it together. We start looking at a way to put a couple of these tools together. So the first way I do this is I start to understand that there's two sort of tools that you use. The one is a little bit of a prediction tool. Okay, basically telling you that Bitcoin's at 100,000 right now, and if it had to pull back from here, 70 to 80,000 is where a strong zone is sitting. So you're predicting, you're saying instead of FOMOing in here, I'm going to wait to see if I get 80,000 because I want to be a strict investor and that's where I want to get. So you're predicting, right? That's where Fibonacci's are strong. They'll tell you, okay, market's pulling down, put buy orders here. It will tell you how to ladder in. Because you always hear this thing, dollar cost, dollar cost, dollar cost, ladder into the market. Fibonacci is perfect for that. So take the bottom top, let me buy 10% here, 20% here, 30% here, and you can place all your orders to the downside, which is actually a very strong and good investment strategy to be doing. Okay, but it's a prediction tool. The next thing as well is like a moving average. It's also a prediction tool. If a moving average is sitting at 200, sitting at $98,000 on Bitcoin, okay, you're going to put a limit sort of there. It's predicting, right? It's going to come down and test it, and then it's going to go. Then you have the non-prediction tools, which is your trend lines. So what I do is I combine both. Okay, I basically combine the horizontals, I combine the trend lines, and I combine the Fibonacci's. And I do it in two ways. Some of my buys I buy with a prediction strategy, and some of my money I put in once I'm confirmed that it was correct. So I will buy 30% when the market's coming down, and only once it breaks a trend will I put the rest of the 70% in. And why am I doing that? Because what happens if I get it wrong? What happens if I buy and the market comes down 50% and I went in with all my money? But if I only went in 20% and I got it wrong and the market went down 30% after that, I can have more money to deploy again, right? And buy cheaper. So the laddering in strategy is very powerful, and the Fibonacci. And then there's a point where, hey, this token's not going to pull out anymore or pull down anymore. It's dropped, it's gone sideways, and it's breaking the trend. Make sure your investment's in, make sure your token's in. And that's where the trend line comes in. So I created the 4-step method. And what the 4-step method is basically taking 4 things and using 2 different strategies to get them. Okay, so over here, let's zoom in over here, and let's go look at Dogecoin as an example. So the way my 4 steps work is I use a Fibonacci, I use a stochastic RSI, I use a horizontal, which is, let me show you what a horizontal is. Because a horizontal is also very powerful. It's called support and resistance. Okay, it's basically when a token has been moving to the downside, it has these levels that it's setting. Right, it's got this level over here, it's got this level over here, and what are you doing? You're just tracking previous data. Okay, but when a token is going down, okay, these are known as resistances. Now so as the token starts going up, this is known as a resistance, which means that if price gets here, price tends to, if it doesn't get through here, it tends to reject here because it's resistance. This is where, if you understand that there are 2 teams in crypto, there's a red and a green team, and they're both trying to win the game, which means that if the token is starting to go up like this, what is the green team trying to do? It's trying to keep higher highs and higher lows, right? So what it does is when this was a hard area for the token to get through the first time, the next time it wants to turn it into support. And basically, it has this mechanics over here, where as the token breaks through this level, over here, it comes down, tests that level, breaks the next level, until all of a sudden it starts to do the opposite, right? Where this will now become resistance. So all that it does is just showing you, and I used to call it ceilings and floors. This is a ceiling. Remember when Bitcoin went $70,000 was a ceiling for Bitcoin. The moment it finally broke out, it tested, and it went, right? It went parabolic. And right now, $108,000 is a ceiling for Bitcoin at this point, okay? And what I say is that you must break the ceiling and turn it into a floor. Once it's turned into a floor, it's going to then look to break the next ceiling. Okay, and it's the same thing when the token is going to the up or the downside. So going back over here now, what I look for is horizontal. So if I look at this chart over here, I'll clear it up. I'll jump here to the one hour chart. So let's say you want to take a trade today. Okay, and what I'll basically do is I'll say, okay, first thing, where is my nearest high? There's my nearest high. Where's the high after that? There's the high after that. Okay, where's one more high after that? So you can take this high over here. There we go. You got 3 highs. Now let's go look at, and what are these? Resistances. Okay, these are areas that I know that we must break in order to start going up again. And if it breaks this one, it's going to go to this one. And if it breaks this one, it's going to go to this one. Okay, and the way that I see it, if it starts to happen, is it must do this. Right? Break it, turn it into a floor. Break it, turn it into a floor. Okay, so there is my resistances. Now what I look for next is I look for my support, my floors. Where's my nearest low? Other than where we are right now. There's it over there. Where's my next low? Over there. Okay, so again, I know that as I'm sitting here now, if we lose this, we're going to go like this, right? To the downside. So all I've done is I've just given myself, where is price going to accelerate? When is it going to move quickly if it breaks a certain level? Okay, so now I have my horizontals. Just pop it in again. 2, 6, okay. Horizontal, horizontal. Okay, next thing now. Is my RSI at the bottom? Not yet. So it's telling me to wait, right? Be patient. Okay, cool. Next thing I want to do is a Fibonacci. Okay, so the first thing that I could see over here is I could see that this token is moving in a uptrend, right? Here's the uptrend over here. I can see it very clearly over here. There's the bottom, there's the top, right? I can see it's currently moving. Remember, this is for the daily, just for the next 24 hours, what I'm looking for. So what I do is I take my Fibonacci and I take it up, okay, and I look, is there a Fibonacci level that is sitting in that horizontal box over there? Okay? And then is there another Fibonacci point that is sitting with another horizontal somewhere? So I want to show you. You see this on the left over here? This was a previous high. There's it over there. So it's telling me that these are the two strong bounce zones for Doge. Okay? If it decides to bounce and hold this one over here, what is it telling me? It's telling me that Doge is in this style pattern over here, the B, which means it's aggressive. It means that this pullback will not be strong and the next aggressive push will be strong over here. So going back over here now I know those are my two major boxes. But I know that firstly, if price gets here to this area here, I'll have two things ticking the box. Okay? I need the third one. The third one is this RSI at the bottom. So it's telling me now, sit on your damn hands for another 2 hours. 2, 3 hours, just sit on your hands. Wait, let's see first. Okay? This thing gets down to the bottom. And it's quite ironic that in 5 hours we have news coming out. Okay, so it's crazy how these tools just tell you, hey, sit, wait, be patient. Okay, now it's telling you, but if this gets down to the bottom, and we are in this green box or this green box, now you have 3 indicators telling you that you can take your first entry. So when 3 indicators, 3 boxes are ticked, you can enter your first 30%. Okay, then the last thing that you need is a trend line. Let me show you an example of a trend line. There's the trend line. Okay, so you're going to ask me now, Sheldon, which Fibonacci is it going to bounce in? Okay, let me just remove these lines over here so you can see it again. There we go. Those are the 2 important. So what I did is I marked up all the areas, but those are the 2 important levels for us to bounce. These 2 major important zones over here. Which one, Sheldon? Okay, is when this RSI is at the bottom. If we hold the green one and we break this trend line, this is the bottom. If we decide to now be patient and decides to drop and do this and then break this trend, that's the bottom. But the main thing now is I've taken this whole area over here and I got 2 main areas. Okay, if I need one more box to tick, right now I'm not allowed to enter this trade because this box is not ticking. Okay, but if it's in this box and I have 3 things I'm allowed to buy over here, okay, and breaking of the trend is where I'll add in the rest. Okay, so it teaches you the power of patience. It teaches you the power of these areas over here. And just to show you something, just to go back over here and show you guys something very powerful, if you go look here at the total 3, because this is where the time frames, this chart that I just showed you here was the 1 hour chart, if you want to make money for today, right? But now let's go and look at investment side of things. Okay, so again, if you had to look at where you are right now, where you were right now, where's the nearest on the left-hand side here? Where's the nearest box? Here. Right? You see it? Okay. Take a Fibonacci from the bottom to the top. Sorry, wrong one again. From the bottom to top. Look at this damn fib. It's crazy. Okay. So you have this fib and you have this horizontal sitting on the left over here. Look where it would have told you to put your limit orders to invest. Okay. It was very clear that that was the bottom previously and that was the top, right? So if you just put your Fibonacci in, okay, you would have had this area highlighting very much over there as well. Now, the next thing that's important to understand is this RSI is still making its way down, which gives me an indication here that this can still actually come down again to these areas over here and then make its way up. And that's why I spoke to you guys about the W pattern, why I think the market can come make another low and then go up again, right, in these areas over here. But again, if we make our way down and this gets to the bottom, and this box is hit and you have three things indicating, and the last thing that you need is you zoom in slightly just so you can see it clearer, is the trend line. Again, which trend line, Sheldon? This one's got 1, 2, 3, 4, 5 touches, that trend line, okay? And that trend line breaks over there, make sure you're all in. Make sure you got all of your tokens in and all these type of things. Then again, from here, token starts to rally itself up. Guys, remember, it is a lot, but it comes, this is what's important. From here, you're going to practice, go on the charts, and it will start to make a lot more sense. And you're going to understand my shows a lot more as you see it every day. Why am I saying Bitcoin will bounce here? Why am I saying these things can happen? But now from here, it comes down, breaks the trend, starts to move up. You put a bottom trend line in, and if alts want to ride for 300%, you got your bottom trend in, breaks it over there, you take profits, you get out, and you do it all again. Can I have ones in the chat? Making sense? Once in the chat, once in the chat. Okay, so getting back over here. Market will only move in three directions. Up, down, sideways. Here is a four-step method example for each of them. If the market's going up, I use a Fibonacci, I put it in. I find horizontal support that is matching with the Fibonacci area. I wait for my RSI to be at the bottom. And on the breaker trend is where I add the rest of my money. If you want to short, it's the same thing on the other side around. If you want to sell, this is how you sell in an uptrend. Okay? Downside, if I want to long, why is it important to have a four-step method that's different on the up or down? Because when the markets are coming down, you mustn't be afraid to buy to go up, but know that it's in a down cycle and the ups are not going to last long. So get in and take profits quite quickly. Okay? Here is my four-step on the downside. The market's going sideways. Here is my four-step if the market is going sideways. Here is the time frames for me to know what time frame should I be looking to make money whenever I need to make money that suits my life. I have a busy week this week. I can only take one trade. Let me do this time frame. Oh, I have 3 days off this week. I have more time. Let me do these time frames. Okay, and all you're doing is you are simplifying, and instead of looking at all of this crazy chaos, you're looking at four things that indicate for you when you're allowed to buy and sell. You focused on one time frame, and all that you have done is you've attached money to that specific time frame. Now next week, not next week, Thursday, that's coming up now, this is where we're gonna focus on the businesses. This is where we're gonna teach you how to make a car business or a grocery business or a Christmas business, and how do I do that on a monthly chart, and how do I take this money of mine and give it purpose? How do I create businesses and roadmaps and structures and rule systems and all these type of things? Today is very much around TA. Okay, now again, if today was a lot for you, a trend line can do majority of it. One trend line, make sure you find four tokens and you can become a trader. You can buy on the trend break and you can sell on the trend break. That's it. You don't need to know all of the fibs. If it's confusing, simplify it for yourself. Maybe the horizontals worked out for you. Okay? But all you're doing now is you're seeing these tools together now, and you need to make a very simple system that is helping to you robot these type of things. So it's not about your emotions anymore. It's about, I'm looking at this right now. Are my boxes ticking for me to get in? Are they ticking for me to get out? And just follow that. It's got no emotion approach. It's got no ego approach. It's got no opinion based, because opinions don't actually matter. It's about sticking to a structure and being disciplined to that structure. And if you can do so, you would have been, and this is where next week's also important, because discipline also comes down to your portfolio. You should have been stopped out 30% of your portfolio yesterday to buy the bottom. You should have had stop losses on 30% of your money. Okay, that is discipline. It's telling you that, yes, you are entering and you can go all into crypto with a certain amount of money that sits on stop losses for days like yesterday. So if the market tanks 50%, you got stopped out for 10%, and you have 30% of your money to buy Ethereum at $2,200. You had 30% of your money to buy Solana at cheaper prices. So by just understanding the discipline and these basic rules over here, you are going to survive massive crashes, massive pumps, massive sideways areas. You are going to have a plan, a system, and a major structure over there as well. Guys, can I have yes in the chat? This is good. I found value today. Value, value, value. Yes, yes, yes. I want to see if we got value. Now what we're going to do is we're going to open up with the team. We got a couple of Jeff's going to come up. I know we've got a couple of giveaways and a couple of cool things, and then we're going to open up to the team for us to get any questions on TA. Sniper Club team will be here. Remember, Sniper Club's your next chapter after school. You need a community. Now you've made this change, you've made this shift, you feel amazing. You need people in the same room that feel the same, that are going to keep you strong and keep your head in it through the hard times and be there for you in the hard times and celebrate with you in the good times as well. You need a community. You need to be a part of that as well over there. Okay, let's bring up Jiv and let's go to some questions. What's up? There's Bruce over there as well. Okay, let's bring Jiv up.
Hello, hello.
Sweet.
Thank you, Sheldon. Thank you so much for that. Guys, how exciting is it that we almost know exactly how to trade properly? Sheldon, you are absolutely amazing. This is seriously one of the best courses ever. And guys, I just want to say congratulations to you all for investing in yourselves.
Thank you, thank you, thank you.
Investing in yourself is really one of the biggest things that you can do for yourself. So trading, just remember, it's an ever learning journey. You can only win or you can learn. Keep that in mind. So I'm going to bring on the team. And before we go into questions and answers, I just have a few little things that I want to let you know. And I want to talk about our giveaway that we have. So I'm going to bring on the team. We have OG Craig. We have, where is everyone? Why can't I find anyone? There's OG Jason and OG Bruce. And I'm just, there we go. And there is Mama Sniper in the house. Guys, before we go into the questions and answers, I just have a few things that I want to share with all of you. We have gone out there again and we have made some lovely specials for you guys. TapBit is another platform that we have gotten bonuses for you guys. This one is at least for a month. So from now till the 1st of March, you guys can go register and go get a $30 bonus. Before I carry on with this, I just want to let you guys know, I know you guys are new to crypto. Some of you are, some of you aren't, but those who are, these are platforms that we collaborate with because we know that we can trust them and they have been there. So just to let you know that when you're new to things, you don't quite know where to go or where to go or what to do. This is one of the platforms that you can go and you can actually see. It actually looks exactly like Bybit. So it's a very, very, very nice platform. If you register, you get $30. The minute you put $50 in, you get an extra $50. And when you trade in futures, you get $100 bonus. Then Bitfunded, as you know, I'm going to give Bitfunded away. I'm giving away 3 Bitfunded at the end of all our questions. Bitfunded is a prop form platform where you can go and spend a little bit of money to get a lot of money to trade with. You do, however, have to there's steps that has to be followed, 2 steps in order to unlock the bigger amount that you can go play with. I will be giving away 3 today. NordVPN, guys, they are giving us 4 extra months for free. This is like one of the biggest deals around. So I wouldn't sleep on this if I was you. Jump on this one. It's 4 extra months for free. And then, guys, Sniper Club. Look at all those beautiful humans. This is the Sniper team. They are all here as well tonight or today. Not all of them, but most of them are here. And we will be talking about Sniper Club as well. But there is a free trial that you guys are more than welcome to go and check out. I just want to show you the last little, this crypto school platform. Guys, I cannot stress enough how you need to get familiar with this. This is your home base. Again, at the top, if you haven't gotten that code, there is the free trial for you guys to jump into the community and check it out for free for 14 days. Again, afterwards, we're going to jump on an AMA in the Discord, the Sniper Discord. If you don't know where that is, please go look there. Join the Sniper community. The Discord is there for you guys. And then the Sniper Toolkit, a really good place to start, especially for those who asked about TradingView and where you can find the introduction to TradingView. I saw in the chats today, there's the TradingView, and then obviously our ledger, how to set up a ledger, because that's how to keep your crypto money safe. But that's for a later stage when you do have a lot of money that you want to keep safe and you don't want to keep it on a platform. And then coin stats, where Sheldon actually goes and checks out all the different coins. You can go and check out the fundamentals of the coins. And then NordVPN, there you can see how to actually use it. So Sheldon has a video there where you can use it. And this one is Banter Bubbles. We actually have this one where you can go and search for the coins, which ones are currently popping and which ones are relevant. Okay. We are going to go into the questions and answers. Before that, I just want to bring Bruce on just to give us a 2-second little snippet about Sniper Club. And all these beautiful humans that are here are actually part of Sniper Club. So they are also going to be answering all our questions. But Bruce, please, do you mind just giving us a tiny little bit of intro just into Sniper Club before we go into the questions? Just unmute yourself, Bruce, please.
There we go. There we go. So tiny little bit. Yeah, I mean, Shiv said it so beautifully. I mean, and so did Sheldon. You go and you take your first sniper school, which is, what is it? It's like, first grade. You're learning your ABCs, and you're learning how to count and stuff like that. And then begins the journey. Like anything in life, this is going to take some work. It's going to take some dedication. It's going to take ups and downs. You're going to make mistakes and stuff like that. And it's so much easier when you do that as part of a team, as part of a community. If you're learning to play soccer, you got a team, you got a coach. If you're learning to play music, you got a teacher, you play with other musicians. And the problem with trading, and it's not crypto specifically, but trading in general, is that usually it's you sitting in a chair with a screen going, what do I do? But with a community like Sniper Club, you have access to world-class traders, people who are willing to spend time teaching you, correct your mistakes, et cetera, et cetera, et cetera. And it's just a great community like that. It's filled with, people just like you, just like me, just like OG Craig and Jason, et cetera. We have Zooms every day, 2 or 3 times a day, going through trade setups. We have specific sections talking about investing, talking about trading, talking about high frequency trading, and then we're available to help you. So it's quite an amazing community, and boy, it's one I wish I had when I was sure starting to trade.
Thank you so much for that, Bruce. I really appreciate it. And now we're going to go into the questions and answers. Firstly, I'm just going to let you all know, 1 question each, please. Keep it strictly to 1 question. Secondly, only trading questions. All the other small questions that isn't actually trading related, we can go and ask in the AMAs in the school Discord. And then please just cameras on when you ask, because I can't actually put you on the screen to ask the questions if your cameras aren't on. Thank you so much. First, I'll go with Roger. I'm going to put you on. Just please unmute yourself so that we can hear you.
Great. Yeah, thanks very much.
There we go.
Thank you. Sheldon said that it would be a good idea to take 2 Fibonacci readings. I understood the first one, sort of like the obvious one, which is at the bottom, when it's at the bottom before it starts to go up. But I wasn't absolutely clear where the second one was. Was it taken on what had previously been a support and resistance point? Could you just kind of remind me what about that second one? If the question
basically there's two ways to do the Fibonacci, and you basically, depending on the time frame that you're on, it doesn't matter about the time frame for now, you're looking for a clear low and a clear high. Okay, you can see it with a wick low, and you want to include wicks here as well, or a clear high and a clear low. So if a token has gone up and you want to see how far it can pull back, you start at the low and go to the high, and then look at the retracements down where it can attach. That makes sense? So that's the one way. The second way is a coin has been at a high and we had a big dump. Let's just say like we've had a dump over the last couple of days, or in the last week, tokens have dumped. Then you would start at the high and go to the low and look at the retracements back up to see where it could make its way back up. And on both of those, the 382 and the 618 are what are known as golden pocket zones. So they're the really important ones. So you want, if it was high and it went low, we bounce, we hit the 382, okay? We can expect resistance there. And we get a little bit higher, we're going to hit the 618. We're definitely going to get resistance at the 618 for sure. And then eventually it'll equal where you are and carry on. So that's in essence, it's the two. Does it make sense?
Yeah, it does make sense. So in fact, they're going in opposite directions. That's the thing I hadn't twigged.
So
I
the
was
one you're trying to
interrupted
measure
at
the
that moment.
pullback, the one
Yeah.
you're trying to measure the pullback, so where you go from the low to the high, where can it pull back to? The other one you want to see its bounce. How high is this thing going to bounce from the low, from the high to the low? And I mean, you got to watch both those 382s and 618s on that bounce.
Very good. I got it now. Thanks very much.
Thanks for asking. Great
Brilliant.
question.
Thank you.
Thanks, Roger.
Thank you.
Okay, so then I'm going to bring on John. There we go. Just remember to unmute yourself so that we can hear your question.
Hi, John.
Hi.
Good morning.
I would classify myself as an investor over 22 and 23. I DCA. So even with this dump, I'm doing well. What I'm struggling with, it almost seems incredulous, is when I've already set up my sell levels based on the 618, 1.6, 2.6, 3.6. But when I look at those cell levels, they almost seem unrealistic. For instance, Chainlink, my levels are 34, 82, 130, and 179. And I'm wondering, am I doing something wrong in drawing my fibs, or am I trying to be too ambitious in what my laddered cell levels would be?
Can you give me those numbers again for Link?
34, 82, 130, and 179.
Yes, you're talking about the fib extensions. So with the Fibonacci, remember what you're doing is you're looking for a statistically likely possible level that the price is going to go to, whether it's a retracement or an extension, which it's going to go to. The more other data you have to correlate that, the more realistic it gets. For example, on Chainlink, let me just open up for a sec. I don't have the fibs drawn out, but if you go back in time, let me just share it for a second. All right. Can you see my chart? Right. So you do your fib extension over here to get those levels up there, which is cool. I get it. But also go look at places where in the past, now, granted, it's been a long time since these levels were reached, but you'd be surprised how relevant they still are. So what I would do is I'd come back over to here on the chart, which is 2021, and I would mark out, zoom in a little bit, and mark out levels that it hit, right? For example, there is a level right there. And just put a little ray on that, right? There's another one that hit twice right over there, right there and there. And what you do is you mark those out and then go back over to your current day, right? Let's go zoom in. I don't have the fibs out there, but your current day, and then you go look and see if they correlate to any of your fib levels. If they correlate to your fib levels, there's both a statistical possibility and a historical possibility that adds up some confluence that those are possible. And then it depends on the market, right?
Right.
I
Okay,
think
that's
yeah, John, I also think it's what time frame are you talking about? Are you talking about a year's time, 5 years time, 10 years time? Because if you're drawing a Fibonacci on a monthly chart, those higher levels that you've got are definitely doable in like 5 years time, perhaps. And so it all depends on where you're pulling the Fibonacci's, on what time frame, and when are you expecting those levels to happen? Are you expecting those levels to be hit this year? Were you drawing it on a daily chart? Or which time frames were you actually drawing your extended Fibonacci's?
I drew them on the weekly with the target that hopefully I'd hit as many of those as possible before the blow off top later this year.
Yeah. So look, I think the 1.618 area, you're not far off. If I look at the 1.618 area on a monthly chart, it's giving me around about $90 on the 1.618. And I think the 1.618 is pretty doable this bull market. Last bull market, a lot of the tokens extended and went to the 3.618 or the 4.618 in the last bull market. But we need to remember it's a little bit different this time. I'm not saying that it's not possible, but we have to just watch that and monitor that how as it goes along and to see which levels we reach, because the market's a little bit more saturated with a lot more tokens. We sitting, I think, in the last bull market. Craig, can you remember how many tokens did we have in the last bull market? Probably like 4,000 or something like that in the last bull market. And now we're sitting with how many tokens are we sitting with now?
Well, we're in the millions. We're literally a million.
There's just so many tokens on the market now. So there's a bit of dilution happening this bull market. And it's the reason why I say there is a possibility we could still, because it's being adopted. A lot of new people are coming in, but is the amount of new people coming in going to overpower the amount of tokens that are out there at this stage? So I do believe we are going to hit at least the 1.618 this bull market. But my exit strategy is I'm going to take a big chunk off the table at the 1.618 once it's reached there. And obviously just keep a tight, close eye on levels. If it drops below, then obviously just get out of those levels. We'll have to wait and see. We chart what the chart gives us on that day, week, month. If we, for instance, on the altcoins, if you see Link has hit the 1.618, but Bitcoin hasn't hit the 1.618 yet, then there's a possibility that if Bitcoin's still going to go hit the 1.618, a possibility Link could continue onto the 2.618. So it's going to be, we don't know those answers right now. We're going to have to watch to see how good are the altcoins going to perform against Bitcoin. How is dominance going to drop? So we just got to watch all those targets. If Bitcoin's starting to hit its target levels and the altcoins are also hitting the lower target levels, then I think we just got to just accept it, but we'll only know at that time.
Can I jump in on that, Danny? Because you brought up something really important. I'm assuming, John, that you were around during the last bull run, and like most of us, you rode it all the way up and then rode it all the way down, right?
Oh, yeah. I just kept
the look on your face.
DCAing.
Yeah, we were all huddling, and we don't want to do that again, right? Anyone with white hair or gray hair definitely doesn't want to do that again. And so just kind of and we also know as pros that we can't guess where the top is, right? We just you top or bottom, we don't know, right? So one of the things we are doing in Sniper Club, and this is just getting specific to what we talked about earlier, is that we have 2 sessions a week that are about investing, longer term trades, right? That we're going to look to capture the majority of that bull banana thing that happens to the alts at some point in the future. And one of the major things we do in that section, in that investing section, is we're putting together a multi-phase approach to how we know when we're getting into that region. It's partially technical analysis, like you're doing with the fib, right? But some of it have timing considerations, and some of it have social marketing considerations. Stuff like, for example, your barber comes up to you and says, "Hey, John, what's the latest price of Bitcoin? I want to get in." That's a hint the market's getting saturated. The guy at the bar, or Sheldon's YouTubes, instead of having 2, 3, or 4,000, had 10 or 15,000 people in there, right? There's all these things that saying the market is getting overheated. And then Sniper Club, we have a whole exercise on deciding where that is, what region that is, and as importantly is what do you do about it, right? Because when we know we're not going to catch the top, so what's a dollar cost averaging out strategy that maximizes our profits versus taking another roller coaster ride? So it's a thing we do in Sniper Club.
Right. And again, my goal is just simply, I want to ladder out on the profit, something like 20, 20, 50, 50, depending on how far it's going to go.
That's the deal.
100%.
That's the goal.
100%. I think we're all planning on doing that.
Exactly.
Take your profits because somebody else does.
Yeah. Thanks for your help on the question. That helped a whole lot.
Oh, good, John.
Thanks,
Good.
John.
Thank you for the question, John. Okay, so let me just take him off here. Then Michael, there we go. Michael, I'm going to pop you on. Just remember to unmute yourself so that we can hear your question. There we go.
Yes, hi, can you hear me?
Yes, we can.
Okay.
Hello.
Hi, how are you? I have my question is actually about the event of last weekend, yesterday. How can it be that the total market is dumping as hell, let's put it that way, in 30 minutes time? Because I have a hard time understanding how that works. So much money off the table in such a short time period. How does that work?
Who would
Yeah.
like
Jason,
to
could you
answer
Jason, could you jump into that
I'll
one?
give it a try first, and then we
Okay.
can all add a little value in there, you know. So for me, it's and we actually had a very nice session with our Sniper Club members yesterday to discuss this. Because that's what we do. We jump on lives and when markets open to see what happens and react and discuss it. And we actually went into this topic, and it's you must understand when there's a lot of manipulation happening, there's a lot of it's sell-off pressure. It's bots as well. People have got a lot of bots set up on their trading accounts. And bots are set up in a way that if a market falls in a certain percentage in a certain time, all the bots kick in and start selling off as well, which causes a capitulation as well. It's also stop losses being hit. There's a lot of factors that cause that big dump. People's stop losses are being hit, which is causing the bigger wicks going down. Not many people have got limit buy orders in at that stage, so it drops that. You've got the bots that are going off. You've got the manipulation going off. You've got you got bigger companies who are selling off, which is what happened over the weekend, was bigger companies being involved and selling off. But everybody had been watching this because we had already seen that they had been moving money around in their wallets. So people were watching this. And as soon as they saw those people start selling, they started selling off. And that's exactly what happens. It's called panic. And it's where people panic and they get out. Long-term investors, guys who are in it for the long run over the next couple of years, they don't worry about this noise. That's why they don't sit and watch the days ins and outs of the markets. And one thing I addressed yesterday on with our club members as well is what happened over this last week or two is not unusual in a bear market. In actual fact, what we've experienced in the last week or two is a really small pullback, actually. We've got a saying, when in doubt, zoom out. And I'll show you quickly one example. Let me just see, just to give you a better idea. Just to give you a better idea, let me just share screen quickly. If I go to the Gala, if I go have a look at the 3-day, okay. I mean, this token hasn't even hit its bull market yet. I mean, this accumulation going sideways is absolutely amazing. I love these charts. But look at this pullback we've had now. Okay. Let's go to the daily. Okay. If you have a look, obviously we're on a higher time frame now, but if you have a look at all these wicks, was it Gala? Was it Algo? Let me just see. Yeah, Algo. Look at all these big drop-offs. Look at all these big sales that come through in a bull market. So in one day, you've got a 30% drop.
Yeah.
This is the last bull market. There in another day, you've got a 30% drop in one day. So what we're trying to say is that get familiar with these types of things. They are normal. When the market starts going parabolic, you are going to see bigger drops. You're going to see, I remember in the last bull market, seeing drops of Bitcoin in 1 hour, dropping $10,000 in 1 hour. So if you can get used to these types of drops like this versus the big ones that are still coming, because when the market moves up very,
Yeah.
very
Well,
quickly,
I was
like,
there the last market, so I know. But I
so the
was just trying
drop-offs
to get
are
it
a lot
understand.
bigger, yeah. And that's that. That's exactly that. It's the FOMO. It's everything where people just, okay, let's sell, and it just causes that capitulation. And unfortunately, there was a lot of bad news over the last couple of weeks. I don't get involved in the news, but the other team members do. I do what the chart tells me, and if we're breaking structure, I sell. I don't worry about the news. But there was a lot of FUD and news and just things happening over the last week, which obviously caused the stronger push down and for us to retrace now. I think we all thought it came a bit too prematurely, but due to external factors, it just happens.
Yes. Okay. Thank you very much. It enlightens things a bit.
Thanks, Michelle.
Yeah. Thank you.
Thank you for that question as well. Now
You're
I'm
welcome.
going to bring on Josh. Please remember to unmute yourself so that we can hear you clearly. Thank you.
Hello.
Hey,
Hi.
Josh. You.
I'm going to piggyback on Michael's question because I actually had a few, but I'll piggyback on that one. So in a day like this past weekend where we had those significant drops, and I realized that they were small in comparison to history, what percentage of your holdings of a coin are you putting in to stop losses so that you can take advantage of those lower prices?
Who's going to take this one?
Hey,
Bruce.
Jason, could you take it?
Okay, so are you talking about your long term or are you talking about your trading portfolio?
Well, I only have spots, so I don't know if that answers your question.
Okay, so your trading portfolio. So your question is how much do you need to, where do you need to put your stop loss, or how much cash you need to have set aside?
I guess maybe I misunderstood what Sheldon was saying is to put stop losses on your trades. But let's say you had 100 coins of something. What percentage of those coins would you put into the stop loss, right? Because I'm assuming you're not liquidating 100%. You're maybe liquidating what, 20 or 50% or something.
Yeah.
That's what is there a rule of thumb?
So as soon as you go over, let's say 8 or 10 coins, it becomes very difficult to manage large quantities of coins, you know, when they're moving, where to put stop losses and all that type of stuff. So first of all, it's much easier to manage a smaller amount of coins than a larger amount of coins. But a rule of thumb is to try and have sort of around about 30% excess funds to be able to buy back into the market once it drops. 30%. So I know some traders that as soon as a coin hits the first TP level, they sell out, and they've always got cash aside just in case there's a drop where they can buy back. It's not about the stop loss. It's about going, once your coin hits a TP, is to sell out a certain percentage and always have cash on the side. If you understand where I'm coming from. Yeah.
I do. So let's say yeah, go ahead.
So a normal stop loss would be, I would say you have to think about wicks too in the market. So a normal stop loss would be about 20% below the current price, sometimes even more.
And would you liquidate, let's say you had Bitcoin, or for example, and you had 1 Bitcoin, would you eliminate half of the Bitcoin or a third of the Bitcoin, the entire Bitcoin?
I wouldn't sell Bitcoin if I could.
I'm just using that one as an example. I mean, you could use any of them, right? I'm just trying to figure out, like, are you selling your entire portfolio at that stop? You know, that say you have, 100 link. Are you selling that entire 100, or are you selling only half of those, or you following me?
Yes, maybe 30%.
Okay.
30%. Yes.
Okay.
Yeah. I
Bless
know,
you.
as I say, the strategy to have is to, with trading, is to, as soon as your trade hits like the first TP, try and sell out a certain percentage. and always keep 20 to 30% of cash on the side for those times when there's a dip so you can buy. Okay,
Can I add something to that? Because
sure.
oftentimes in crypto, we tend to overlap the ideas of trading, right, versus investing, right? Investing is a thing you do where you're accumulating tokens. Most of us stick them in a wallet somewhere where there are no stop losses, right? And we're holding that through all the ups and downs of the market to a point where we think we're coming towards the end of that parabolic run, and then make our decisions what to do with those. That's the investing portion. That could
Yep.
take months, or years, decades even, right? Just it's you have an investing long-term mindset, right? Then there's the distinction is trading, right? Trading by its nature is I'm getting in, I have an objective in mind. This is going to go up X%, and I'm going to take my profits on that. Personally, 95% of my stuff is in long-term investing. Okay. It didn't start out that way. I've been building that for a long time now, right? Whoa, sorry about that, guys. I got a new thingamajigger here that has a mind of its own camera.
Use your hands,
And those, so yeah, every once in a while you get zoomed in on a pimple on my nose. It's pretty funny. Yeah, because I talk with my hands too. Anyway, but all the trading stuff. So, leverage trading, spot trading, margin trading. These have short-term objectives, anywhere from hours to even up to a month to all of that is stop losses, right? The reason is that the stop loss, it's designed to stop a loss, right? So if you get into a trade and your theory is it's going to go up, right? And I don't care whether it's a margin trade, a spot trade, or leverage trade, we're wrong sometimes. The market just does something else, right? It's not that you're bad or you even have bad judgment. It's just sometimes the market goes blah instead of blah, right? So what you want to do is, and this is what Sheldon alluded to, is if you're in a trade like that, right, you want to get out with as small a loss as possible. Because the mathematics of profitable trading are very simple. Small losses, big wins. That's it. Even if you're 50-50, you're profitable. So on things that you're looking long term, markets will go up, markets will down, just pack that away in a wallet usually, right? They say not your keys, not your crypto, right? And then let the market run. And the percentages, it kind of depends on where you're at in life, right? If you're starting with a small amount, you may not have enough capital to build up a big investment bag, and you might need to trade your way there, right? For example, I started with just trading, right? And over years, what I do is I have leverage accounts. The profits from those leverage trading accounts all go into my spot and margin trading accounts, right? The profits from there go into a holding bin for when the market has a major pullback, and that's when a dollar cost average into investments, and it just waterfalls, right? The amounts are totally up to you.
Okay.
Does that
Yeah, I
help?
guess
Your question.
a little bit. If I can maybe just dig in a little bit here. So let's just use a perfect example of a coin that I had. I had XRP, right? When it hit
Yep.
my break, I was up on it, not a huge, but I was up. But when it hit where my break-even point was, I had a stop loss and it sold everything, right? And then I waited until the next morning and it was up above where my original buy point was. So I thought, well, shoot, maybe I shouldn't have sold 100%. Maybe I should have sold 50% or 20%. And then, hopefully I would have got in at the lower price. And so
Right.
I feel like I kind of messed up by
So
selling it 100%
here's the thing is you're defining the problem right now, right? Is that you got your XRP and you didn't have a plan, right? Because if you had a plan up front and you implemented that plan, you wouldn't be reacting to the emotion of the moment, right? Oh, gee, what
Well,
should I do? XRP's pumped, right?
Well, I had the stop loss set up in there. So if it
Okay.
went to my break-even point, it would just sell it all. That's-
Okay. So this was a
Yeah.
trade and said, if it comes back to break even, get me out, I'll get it again.
Mhm.
Yeah. It's a perfectly rational plan.
But should I have sold all 100%? or would I have been better off just doing like 20% or
He-
50%, or is that a
you're
personal
not going to like
decision?
this. You're not going to like the answer, right?
Uh-huh.
If you had said sell part of it, you'd have wished you'd sold all of it. If you say sell, if you ended up saying sell all of it, you'd have wished you'd only done part of it. There's no way to know. Just
Okay,
make
so
a
there's
plan.
no rule of thumb
like-
on that. I gotcha.
Yeah.
No.
Gotcha.
No.
Okay.
What,
right.
Josh, what you need to look at is that, and I'm going to use XRP. XRP's high in January 2018 was at $3.25. Now, normally when a coin comes up to its high that it's had a couple of years ago, it normally hits resistance there, then comes back, retraces, and then takes the next leg up. So always look out where a coin's had a previous all-time high. It's bound to find resistance at those points.
Okay. Thanks, everyone.
Yep,
Yeah.
you bet,
Thank
Josh.
you. Thank you very much. Okay, I see Vincent is here. We couldn't answer his question last time, so I'm going to pop you up. Just remember to unmute yourself if it works this time around.
Hey guys, how are you?
There we
Hey,
go.
Vincent, how you doing, bro?
Hey.
Vincent.
Great. So this is more of like economics question, I think. I don't know. It's not really for trading, but how do you think these like tariffs that Trump just implemented are going to affect the short term and the long term of this crypto market? Because I'm a little iffy on what's really going on and how that might affect things.
My crystal ball's broken, so it's got to be somebody else.
Or what does like a tariff really? How does that affect the market?
Well, I mean, think of it this way. What's the number one thing that's been impacting us for the last year? What do we do every 6 weeks or so? We go watch the FOMC meeting like hawks, right?
Right.
Right. Powell gets up there and they're lowering interest rates, they're raising interest rates. I mean, we go collectively as a crypto community a little obsessed with that, and for good reason, right? The interest rates have a profound effect on the next set of movements and how the market's going to react. Now, tariffs, what do? They basically end up raising the costs of things. Raising the costs of things causes inflation. If inflation goes up, the Fed's not going to want to bring interest rates down, even they're even possibly going to want to raise interest rates. So it's kind of a wait and see, right? We hope interest rates come down, because as interest rates come down, that means more capital is flowing into the market, and that's generally good for us.
I see. So
And
you're saying that
Vincent,
these,
just
well,
to
are they
add
going to
there,
lower interest rates because of the you're saying they're not, that they'll higher them?
Well, if inflation goes up, they're going to keep the core interest rates up, right? Because you want to combat inflation.
Right.
And if they keep the interest rates up, that holds capital back. They're trying to dampen the market, and it works.
I see. So that would be more of a negative effect on the market.
Yeah, the variables we just do not know what's really going to happen, right?
Yeah. Okay.
I mean, yesterday, they announced those tariffs. The Wall Street and crypto went indiscriminately nuts over it, and then it turns out a couple hours later it was like, well, we'll do it in a month. We'll take a look again.
Yeah.
So to try and predict it right now,
What
not
was
going to
the
happen.
question there, Bruce? Was it around when is altcoin season?
What's that?
What was it? What was Vincent's question?
What's the impact of the tariffs on crypto and that stuff? And yeah, man, we just go through it together.
Just to add on that, Vincent, when an announcement is made, there'll be initial reaction.
Yeah.
It always just recovers and it finds its way back. So when something is said or done, there's going to be a reaction to it, and then everyone forgets about it 2 days later and waits for the next thing to come. And if I can, in the last bull market, I don't know if you were around and you experienced anything in the last bull market, there was always something. So last bull market was there, I think we've learned to ignore the noise. We've learned to ignore the FUD. We've learned to, it's part of this thing. When a market's going down, somebody will always go find a reason why the market's going down or why it's dumping. As long as we are holding levels, which we are. I mean, if you ever look at this pullback and just zoom out onto higher time frames, not breaking, we're not going into bear territory. We're literally just going down and retesting normal levels like normal TA should do on a higher time frame. So there's nothing like really alarming about it. It's just people always go and find it's new sales and everything. There'll always be a reason. So just, I mean, I think in the last bull cycle, when every single pullback there was in the bull cycle, there was a reason and an economic reason, and everyone just thought Bitcoin's going to zero, and and we've just learned to ignore that. We've got a long-term vision. Obviously, we protect our shorter time trades and capital, and if we obviously any leverage trades or margin trades, we protect that more. So we do still listen to the news just to obviously protect our shorter term trades, but when it comes to our longer term holds, we know what our vision is, we know where it can go, and until we start breaking certain structures, we're still bullish and we still believe that it's fine. And there's nothing alarming like, oh my goodness, none of this happened in the last bull market. This all happened in the last bull market. There's just
so do you guys think that the reason like the market, went all the way down, or the Bitcoin went down to 91 was because of that news, and now it's in a recovery zone?
Yeah, and it was just uncertainty, and market doesn't like that. I mean,
not just that, there's a lot. It's the news, but you also got bigger investors. Like we said, there was manipulation, people that want to buy in lower, people wanting, some companies are needing to liquidate tokens because they need money for things. There's a whole lot of factors in play. But if the weekly stochastic RSI has been coming down for weeks and it hasn't reset yet. So it just could be part of a normal weekly stochastic RSI reset. It's nothing out of the ordinary. When it go measure when a weekly stochastic RSI has gone down on Bitcoin before, go measure the move and compare it to this move. And there's not a big difference. So it's just that there's something that triggered it to happen now. We weren't expecting it to happen so soon, but it's happened now. And if you go have a look, the weekly stochastic RSI is probably about 23 to 25% away from being completely reset, which I am more relieved for that it's happened now, because now we know we've got a good couple of weeks and months of going up ahead once the stochastic RSI on the weekly is reset, rather than it was starting to turn halfway and then we're still sitting in mid-air. Oh, we're going to go down at some time. So it's just giving us that bit of a reset to give us the next big push up. So
I see. That's how I felt about it too, that it was good that it came back to 91, because now that creates an opportunity for traders to start, putting in longs and getting in at lower levels.
correct.
Yep. I mean, take a look at what actually happened, right? You can actually see this on the chart. So before the dump happened, right, price was in this general region, right? Friday, Saturday was right over here. And in most of us in Sniper Club, we're kind of predicting that we were going to tickle this, we kind of re-hit these areas, those regions again, and that was going to take us off so we could take a bounce back up into the hundreds, right? Back up into 105, 106, right? So we had this range to trade. The news hit, dropped us, look at that, exactly to the bottom of the range. This is the range Bitcoin's been in. Nothing, I mean, news-oriented, but it came right down to exactly where this was, and this was. Exactly. Right. And so there was nothing untoward with it. And then what happened was the emotional reaction. Every action is an equal and opposite reaction. Went crazy, and people FOMO'd after that, but not in Sniper Club, right? We kept our cool because we know that what's going to happen next is that next retracement. And now we've redefined this 382 right there, which is what we were studying. That 382 now is support again, right? So by using your TA, right, and staying cool and having a plan, you can now capture these moves. Does that make sense?
Absolutely. Yes.
Good.
Thank you.
Good. Glad to hear it.
Cool. Thank you so much. I'm going to
Thanks,
take
Anne.
you off now. Bye-bye. Okay, guys, we have time for only 2 more questions, and then I'm going to go into the Bitfunded giveaway, and then I'm going to send you all to the Discord after party, in the school's after party, and then you can go and ask all the questions that you want over there. Okay, so 2 more questions. I'm going to bring you on. You've been sitting patiently and waiting for us. Please just unmute yourself so that we can hear your question, please.
Oh, hello, everybody. I'd like to thank you. I'd like to thank Sheldon and the team. You've been very instrumental since I joined last year, March. So it's been just an amazing support just to be on the calls and the school. So this is probably my second, third time. And every time I feel a little bit closer to mastery, but I'm not there yet. My question today, I've just been itching to ask this, is that I'm now in a place where, and this is to do with the previous questions that came up with leverage. And I was wondering, like in a market like this, and especially what happened yesterday, how do you treat, how long, because I've also been watching Sheldon with leverage on the shows, and I've never figured out, like when you do a leverage thinking that things are going to go up 2 times or 3 times or whatever the case might be, how long do you take this leverage for? Like, is it for I mean, is it for a couple of weeks? Is it for a couple of days? Like, is there a way to like approach this question in a clear way? Because I never know. I have a little bit of portion of my portfolio that I want to play with this, but I never know, like, how long do you leave a leverage, and how do you prepare for something like yesterday, keeping that in mind?
Who wants to answer
Well,
this?
I mean, Danny's great. Got some brilliance in here, but in a nutshell, you've got to take a look at a couple of things. First is, what's the market doing, right? Is the market volatile and ranging? If it's volatile and ranging, and you plan on a trade that might last 2 or 3 weeks to get from point A to point B, you're going to get frustrated because you'll get a round trip, right? If the market is, trending, Bitcoin's trending up, and it's going on for a while, you can plan yourself along and trade. So you gotta take what the market gives you, right? There's no formula. It's not going to listen to you. You got to listen to it, I guess is what I'm saying with that. And some of the shorter term trades could last hours, and longer term trades could last, weeks and up to a month or so, even on leverage, right? But the market has got to support that. Right now, we tend to be, you just look at the market, everything follows Bitcoin. Bitcoin's coming down to the 90s, right? And it's tickling in there. I'm not going to give a specific range right now. And it's going up to like 104, 105. There's your range, right? So if we're towards the top of that range, can we expect, using technical analysis, that it's going to reject soon? Yeah, right? So make a shorter term trade if you're taking along. If it's towards the bottom of the range like it is now, right, you can expect we've got a little bit of time before it reaches the top and rejects again, and then can have a slightly longer term trade.
Okay.
You following me? Okay, it's that.
I do.
Danny, yeah.
Bruce, maybe also touch on the fees, that the fees also escalate over time.
Yeah, well, maybe you said it, right? The longer you hold, leverage trades are the most expensive trading option you've got, and the higher you leverage and the longer you hold the trade, the more those fees add up, and you got to take them into consideration. Spot margin fees are much lower. It's just interest, and then your spot is often zero or close to zero. So if you're going to want to hold something for a longer period of time, you might evaluate whether leverage is the right tool for the task.
Okay, and I guess with margin, you end up keeping the coin, right? Whereas leverage is just all contract, correct? Is that
Yeah, and that's right. Like margin is actually spot trading, right?
right?
The difference is that before you buy your link or buy your injective, you get to, just like buying a house, you get to borrow some money from the bank, right? You put your down payment, let's say 5x, you put your 20% down, you borrow the rest from the bank, right? You take that trade, which is 5 times bigger than you normally could afford by yourself, right? But at the end of the day, you owe the money back. Win, lose, draw, you owe the exchange of money after you sell it, before they release the token and the funds back to you. You got to pay off the debt.
I see.
So
Okay.
Hugh, just keep in mind there's a few things. Buying your tokens on the spot market, you own the token, and there's no risk. Okay, so I know you mentioned you're looking at doing it with a small percentage of your portfolio, which is great to hear, because most people use all their portfolio in leverage margin, and that is not a good
dangerous
strategy at all. So it's all about what is your strategy and what you're going to do. We have, I would say probably about 70% of our portfolio is in spot, safe risks, assets. 20% is in spot, but higher risk assets. And 10% is what we play with on high risk. And what I mean by high risk could be margin, leverage, meme tokens, chance token, something comes out today. So it's a very small percentage of our portfolio that we actually put into leverage trading and all of that. When it comes to margin and leverage trading, you don't own those tokens. Okay? They borrow them to you, yeah, but they can take them from you very quickly. Okay, where in spot they can't. The only difference between margin and leverage, it's you buying on different contracts. It's the margin, they're still borrowing you money, but they're borrowing it to you from spot markets. And leverage is they borrowing it to you from perpetual contracts. So it's just different contracts. It's from different places, and obviously there's different shorting techniques, and there's a whole lot behind it. If you're in Sniper Club, you can go watch my margin tutorial. I give you the difference between the margin and leverage and all of that. And there's no set strategy as to we're taking a leverage trade and we hold all our leverage trades for a month. You can't. You've got to do what the chart gives you because it's such high risk. And with all these pullbacks and stuff, you have to have a strategy when it comes to leverage. You have to plan your trade and then trade your plan. And so you've got to know exactly why are you taking this leverage trade, where is your TP level, and obviously where's your stop loss level, and move your stop loss up as the market moves up. But you do have a very high risk of being stopped out because you've got to move your stop loss up. You can't just keep it where it is. You've got to move your stop loss up. You've got to have a proper risk management strategy in play. So sometimes we have had leverage trades that hold for 2-3 weeks. And sometimes we have leverage trades that hold for 2-3 days. It all depends on what the market's going to give you that day and what it's going to do. If by some chance you hit the bottom, say for instance, this pullback, Bitcoin is happy at the 91 region and that was a bottom and you got in on the bottom of that wick and we started making higher highs, we've come back down, we've made a higher low, great. You can possibly hold that leverage trade for a couple of weeks until that time frame has got into an overbought territory. So it all depends on when you get in, what strategy. If the market's been pumping green for a couple of days and you get in on a trade, no, you can't really hold it for 2-3 weeks. Remember, the market's got to come down. It doesn't go up in a straight line. So it all depends on when you're taking it. So just do your assessments properly. One thing I find is I have made more money on leverage trading by being picky, meaning patience. I'll wait for these pullbacks to happen. Then I get into the trade and I'll only take a leverage trade when there's a clear flashing signal that this is now time to take. And then you can hold those longer. And it also depends how much time of the day you've got to trade. You know, what is it that you're doing that for? You know, if it's going to be longer term, I would say look more into margin and obviously on a very, very low, but just keep in mind the fees that are involved as well. When you close those trades, you're not going to land up getting everything out because they're going to deduct their fees. So margin, you're going to be charged a few fees, whereas on leverage is a lot more expensive because there's market maker fees, there's selling market fees, there's interest rates. And so it all depends on how high leverage you take as well, because then they charge you interest per day. Plus you selling into a market that there's got to be other buyers available. So you've got to look at the volume as well that the exchange that you are trading on, how much volume is available for that token, because you might not be able to sell at that price. So there's just a lot of factors around it. So I would say form a strategy that you like. We've got our strategies and they vary. There's not just one strategy to do it. There's different time frames. There's different, if we know we entered a trade now and there's an FOMC next week and there's news that it might be, we get out of the trades. We don't just know we're going to leave it for 3 weeks. There's just so many different things that you can, whatever. So just plan your trade and trade your plan, and do that with every single time you do it, and be patient. Don't FOMO into the market. Don't be greedy. Don't go for high leverage. and always put a stop loss and put your risk management in play. That's the key point.
Can I highlight something Mama Sniper just said? Because I want to make sure everybody that's on the call gets this. She said, be picky and patient, right? You're new as new traders. I'm assuming most of you on the call are new. You're excited by your new skills you're learning, and you want to be active, and you're also curious about all the different stuff and all the indicators, and there's going to be a desire to do a lot. I'm going to give you a little preview into your own future. You're gonna have a period of time when you go towards complexity and a lot of trading, and you will find is that as you grow, you're gonna want to be more patient and picky, because a couple really good trades that you were patient for are the ones that are going to pay off.
I've made more money. I've made more money if I take 3 trades in a month. I'll make more money on those 3 trades where I've been picky and patient. I'll make more money on those 3 trades than I have on taking 20 trades in a month.
Yes.
Trying to get in and out. It's just, you're just adding to your risk factors. The more you're going to trade, the more risk you're going to be opened up to. And it's also, for me, it's an emotional thing. I like to take a trade, get out of the trade, take a couple of days off, and not off, I still look at the markets, but take a couple of days off from the trading, come back with a clear view, clear my charts, redo my assessments, and take it from there. And I promise you that's been more successful for me, but that's my strategy. Some people like to scalp trade and make a lot of money on a daily basis, and that's their strategy. So I think it's just you need to find what your strategy is going to be in that.
Wonderful. Thank you so much. And just one last thing with margin and leverage, I had heard, I don't know if this is right, but a lot of people do it so that they can have less money on an exchange. So it's more protected in case something happens in the bull market, because I hear a lot of things happening with the security of things. Is that also another reason that leverage and margin come in that sense?
Of course, you only have to put in $100 and you get to play with $1,000. You're risking $100 of your money to play for play with $1,000. So definitely, there's a lot of reasons. It's also about not risking all your money and just risking a little piece of your money, but borrowing from them. But it can obviously there's pros and cons to it. You lose that $100 and you go into a spot and you pull another $100 and put it in, and you pull another $100 in. So it's all about controlling emotions, and controlling any addictions, and just not touching your spots. Like that's one thing. Rather make money. Like Sheldon always says, rather take your first spot trade with your tokens, with open up a spot trade, make $100 on your spot trade, take the $100 profit from your spot trade and use that profit in your margin, rather than taking your own capital. Make the money to go and play with, and just accept it. And it's a thing that if you're going to take a leverage trade or a margin trade, you got to use money that you can afford to lose. You can't go and trade leverage with money that's with your house money or your pension fund. You can't do that. It's not right. So rather take a spot trade, make some extra little cash on a spot trade, take some profits on that spot trade, and then play around with profits. Don't ever start feeding from your spot. And you'll learn from Sheldon next week when he talks about the businesses. A lot of people get frustrated because Sheldon says, you know what, open up different businesses on different exchanges. And they're like, but why so many exchanges? Why so much of this? He says, because you're going to be tempted to take from those to feed into your leverage trades, and you're going to whatever. So it's best to have it. And also you want to be able to have all your assets on different platforms exactly for that, in case one goes belly up and all your money's on there, like FTX did. And a few others did in the last bull market. So yeah, I think there's a lot of reasons behind it. But just make sure that you're doing it for the right reasons, and that you have got your rule system in play. We've all got our rule systems on boards and stuff, because even though we've been trading for a few years, we're emotional people, we're human, we still make mistakes, and we still have greed, and we still FOMO in, and we still do that. And that is why community is so important as well. And that's why the school community is so important, getting involved on the Discords, getting into Sniper Club, being part of a community, because we kick each other's asses. We literally got each other's backs, and that's what we have formed with us. It's like, oh, I've taken this trade. Oh, you put your stop loss in. No, I haven't. Go put your stop loss in place right now. And guys, market's coming down. Oh crap, I'm out shopping. Let me whatever. And it's just about forming that community and actually being able to be on a social platform where you've got people who are watching your back and where you can, do all that. So yeah. Thanks, Hugh.
Thank you so much.
Thank you.
Thank you so much for your question. That was a great question. Okay, unfortunately, we only have time for one more short question, so I'm going to ask whoever. Sorry, guys, that's my daughter. I'm going to ask whoever I bring up next to just make it short and sweet, and then we're going to get into the bit-funded giveaways. Jacob, I'm going to bring you on for our last question. Please remember to unmute yourself just so that we can hear your question.
There.
Okay,
Hello. How are you?
Hi. Nice to meet you.
Hello,
Hey,
Jacob.
Jacob.
Yeah. So okay, I gotta come with first question. I've been in crypto since November 23. I've only been buying, I've been selling. So my idea, okay, when this bull market comes, everything will go up. I've invested mostly in Bitcoin, Ethereum, Solana, and Sui, and now I'm thinking about doing a bigger investment, and I'm thinking, okay, here everybody says it's not the right time to go in and buy Bitcoin now. But I'm thinking, because, okay, the money that I will make on the altcoins and the memes, I will use them to buy Bitcoin, when this bull run, apparently. It's my first time that this bull run happens, so I don't know. But then I'm thinking, okay, if Bitcoin now on this bull run, it will go up to, let's say if it goes to 200, then the altcoin season come, I take the money there. And normally they say, okay, people go out of Bitcoin, it goes, they, take profit there, go in Ethereum, then it go down to altcoins, then it goes to meme. But what we have seen now, like the correction that we have now, with this great news, it dropped to 97, 98. Are we sure that, that Bitcoin, when you take profit from altcoin season, that if I'm going to buy Bitcoin at that time, so maybe Bitcoin now it's around 100, maybe Bitcoin at that time will be 170, 180, maybe it will be 200, because now, big institutions, United States, say they're going to buy. Why wouldn't they buy now? Why would they wait buying until one Bitcoin is $200,000? So I'm like, what should I do? Because like Sheldon, it's not the right time to buy Bitcoin now. So I'm wondering, what should I do,
Jason, there we go.
Jacob, the best way to buy Bitcoin is to DCA, dollar cost average, or ladder in.
Okay.
I know a trader, for example, that's been laddering every single week. He's been putting the same amount of dollars into Bitcoin for the last 2 years. And his current average is sitting down at about $50,000. So his average entry is sitting at $50,000, and Bitcoin now is at $100,000. So for my sort of suggestion is to have a dollar cost average entry and not try and time the market.
Okay.
Yeah.
Yep, that makes sense.
Yeah,
But,
also it's
with
like
these- sorry,
That's fine.
Danny. With the dollar cost average, you must try and put in the same amount every single week. Like, for example, every single month. If it's $1,000 or $500, put the same amount in, regardless of what the price is. Sorry, Danny.
No, that's fine. So
Yep.
yeah, how we're doing it, a strategy from our side is whenever there's blood in the streets and whenever it's red,
Yeah.
buy, take that opportunity and we buy. I mean, we've seen it in the last bull where some tokens don't even pull back and come back, so it's about dollar cost averaging. You don't have to go all in right now, exactly what Jay said. It's about just putting some more in now, and if it drops again, put some more in. It's if we start breaking structures to the upward side, then yeah, put some more in, just obviously on a higher time frame. And for us, we've been dollar cost averaging in also for the last, I mean, if you have a look, we've actually been in the bull cycle actually started early last year already. We've been in an upward trend. So every time that there's red, we buy. And you asked the question about why would somebody want to buy when it's at 170,000 or whatever. Unfortunately, that is what happens. And we saw it in the last bull market. People buy when it's green, and we don't have that strategy. Our strategy is we buy on the red and we sell on the green. Whereas a lot of people have got a mentality of they got to see it be green first before they buy. And if you work out your average entry prices versus on just buying the dips, there's that famous saying, what's it? BTFD. Hey, Bruce, buy the F and dip, hey? BTFD. There's a saying, because and that's exactly it. You won't be sorry. Yes, you might buy now and your portfolio might drop by a couple of percentage, but you've got to have your long-term vision. You've got to know where you're going and where it is. I've got a strategy that I've done for the last year, and it has really helped me, is any trades that I take, whether it be on spot, margin, or leverage, and I'm talking not long-term. My long-term I don't touch. I don't sell, I add to my, if the market's red, I add to my long-term portfolio, because that at the end of the day is my safe haven. And I, any trade that I take, and I make profits, whether it be on spot, margin, or leverage, I have a three-way splitting system, 30, 30, 30, and then the last 10 is whatever I want to do with it. But 30% I put into, I buy tokens for my spot. And I don't care what price it is at that point. Even if we're going up, I just add to my spot. 30% I keep in dollars for in case we have red days like this, because this is going to come and there's going to be lots of buying opportunities. And the other 30% I'll either bring out into my currency and use it if I need to pay something, or I'll leave it in my trade and increase my trade. It all depends on where I am at that point. And the reason why I do that is because it's every single time you have these pullbacks, how many people sit there and go, oh, I wish I had dollars to buy these pullbacks. And, you know, like Bruce said it perfectly earlier, if you don't buy now, right? If you buy now and the market goes down, it's going to be, oh, you know, I should have waited. Or you don't buy now, and the market goes up, it's like, oh, I should have bought, you know? So it's rather just dollar cost averaging in. You don't have to go all in. Take 20% and go in. If the market goes up, great. You're 20% more in the market than what you were. If it goes down and it falls another 10%, great. You can get another 20% at 10% cheaper. And that's exactly what Jay was saying. The dollar cost average is the best strategy than trying to time the market.
My thing is that, you know, I'm selling up some properties, so I will have the cash there. And the worst thing I know is having cash on the account, because that doesn't make any profit. So, and like I said, when what I have on meme and all coins, you know, when I say, okay, now it's time to sell, and I sell it there, I want to put all the money into Bitcoin. I don't actually want to sell any Bitcoin, you know, that is just long-time investment for me, and it's not money that I need. So I just want to accumulate more Bitcoin. But I'm thinking, okay, should I, you know, with this, put more money now in all coins, you know, because everybody says, okay, now it's, you know, that will outpass Bitcoin. But like, okay, when I sell these all coins, you know, and I make profit on them, and I want to put that profit directly in Bitcoin. So I'm not, you know, then it will be more expensive, you know, to buy Bitcoin at that time, because are we sure that we will have, like the other cycles, that Bitcoin will fall down like we have seen before? Or since United States, when they have started buying, maybe Brazil, Argentina, other countries, that it continue on a high level, that you know, that you don't get this drop in Bitcoin?
Yeah, so, you know, we've got our strategy is, you know, I think we've looked at our portfolio, and we've got a lot of tokens at the moment. Sheldon and I sit and we go through our portfolios together every week, and we just look at it. And I mean, I'm talking like we've got over 100 tokens, even more than, way more than that in our portfolio. Now, we haven't really seen an altcoin season yet.
No.
Some of the tokens have popped. but I would probably say about 30% of the tokens have started their altcoin season, where around 70% of the tokens have not started their altcoin season yet. We did a bit of an assessment on charts yesterday, and we saw that majority of the altcoins, at least 67% of the altcoins, with this drop now, have dropped back to bear market prices. So they are on a Black Friday special, again, giving you the last opportunity to buy before we go up. Now, if Bitcoin's going to fall 50%, the alts will fall 100%, right? I'm just exaggerating here. The altcoins will always normally do will do more than what Bitcoin does, because Bitcoin has got a bigger market cap, and it's a lot stronger and a lot more investors and all of that. So at the end of the day, yes, you do want to be into Bitcoin, but you're not going to use I wouldn't use, my strategy is I wouldn't use Bitcoin to make my wealth this time around. I'll have some money in Bitcoin. So it's about diversification. You don't have to have all your money in Bitcoin. You don't have to have all your money in altcoin. You do a splitting system, and you can split it and say, okay, you know what? Let me put 30% in Bitcoin now, and let me use 70%. And I'm not giving you financial advice here with your money, Jake. Just giving you examples of what we're doing. And take the other percentage and put it in, diversify into altcoins. For instance, what is the big hype at the moment is AI, right? Why would you not want to have some money in AI? Everyone's believing AI is going to be one of the big narratives, like gaming was in the last bull market. And these are the type of narratives. So rather make sure you're covering different narratives. Maybe rather make sure, and you're in good projects, and you've done your homework, and you've looked into them, and you've done that, and rather spread a bit of diversity around. Our strategy is, we've marked out on the charts where we think our long-term is, right? Which we spoke about earlier with one of the other gentlemen. We'd like the 1.618 on the extended Fibonacci. As soon as Bitcoin and the altcoins start reaching the 1.618 on the Fibonacci, we want to start taking our 100 to 200 tokens that we've got and start filtering it down to smaller, because we don't want to, when we start reaching the top and we feel we want to get out, you don't want to sit and have to try and sell over 100 tokens, right? So we are going to leverage off altcoins currently. We've got Bitcoin as well, but that's just, we know that can maybe 2 or 3x, whatever. Whereas altcoins can maybe 5x, 8x, some will 10x, 13x, 15x, and the newer tokens with very small market cap can 20x, 30x, 40x. So you got to go find those tokens that have got small market caps, but good projects behind them, but very small market caps, because they've got growth potential. And look at the project's roadmaps to see what are they doing, what are they launching over the next year, what could make this token go up. So you actually got to go do a lot of homework on these tokens. And that's why we got so many, and we do all these, we look into the tokens. But once our tokens start hitting, we've got alerts put on our trading view, and once they start hitting the 1.618 levels, we want to start selling those tokens into Bitcoin or Solana or Ethereum. And you want to basically we're taking the top 5 tokens that have got the best volume. You want to be able to sell into a token that's got the most volume in, right? You don't want to be trying to selling a token where there's no volume. So it's about, we know when we start hitting the 1.618, we're going to take our portfolio and we're going to start making it smaller. By the time the bull market is over, we want to only be able to sell 5 tokens. And I'm just giving an example here. I mean, it might be 6 or 7, and those are going to be tokens that have got high market caps, they've got high volumes on good exchanges. And some Bitcoin will obviously remain. And obviously we want to try and be patient for another bear market. The market's not going to go up in a straight line, Jacob. I do believe we will have bear markets, and they will come. We've seen it now. We didn't expect Bitcoin to go so far down now in this last bear market, and it really did. It does happen. And I think it's just about trading what the chart gives you that day, that week, that month, and then taking it from there. So yeah.
Well, I have around 20 different tokens, which is 50% Bitcoin, and then Ethereum, maybe 1/3, and then Solana and Sui, and then I have, a little bit of Popcat and Pep and Dog with Hat, and So, but I think most of them, at least when I bought them, were in like top 100. So I've only been buying from crypto.com. That's the only platform I've been on. So but my plan is to when they go, I think for me, if they go 4x, it's fine. I'm rather gonna sell them there and make my profit, and then
Don't be greedy, 100%.
have the cash and
Exactly.
invest it in
Yeah.
Bitcoin.
The
100%.
So
if you listen closely to what Mama Sniper's talking about,
yeah,
it's really important to realize that amateur investors, amateur traders talking about what they could make, the hopium, right? Oh my God, I'm going to make this, I'm going to make that, right? The pros spend an awful lot of time on risk management, right? So like Danny's style of as the market is pumping and everybody's getting greedy and FOMOing, she's reducing her risk by moving from riskier assets to safer assets. Your idea of going from the smaller altcoins into Bitcoin is good because it's doing the same thing, right? You don't go into Bitcoin even at 170 or 200. You don't go into Bitcoin because of its future potential.
yeah,
You
that's
go
what I'm
into
thinking.
Bitcoin because it's going to protect your asset, going to protect your wealth much more than the alts are, right?
Yeah. So
So
for me,
reducing
I'm
risk,
not
which is
going to take
important.
it. I just want it in Bitcoin because I believe, in 10 years' time that it can be $500,000. And when you
Yeah.
see when you see who are buying Bitcoin, like Michael said, it's just buying, and on the top, people that know what they are doing, I guess. So
Yeah. So the equation I try and use both for trading and investing is really simple. It's not how much you make that's going to matter.
No.
It's how much you don't lose.
Yes, that's what I thought.
Right.
Yeah.
So always keep that risk
Sorry,
in
this took
mind.
longer time than it should take, but should be a quick question. But thank you so much for your help. But
you're welcome.
Thank you so much for that.
This sniper school, because I put I think a couple of $100 in this Bybit account and to register there, but I have problems, with the registrations.
Jacob, please do me a favor. Can you go into our school Discord? We're going to open up a stage right now after this, and you can go and ask the question over there, and they can help you with that.
Yeah, okay, because I can go directly in there on that school. Because I thought I had to invest this, or register with this money in order to be part of it.
No, I'm sure you can get in there. No, I'm sure you can get in there.
Okay.
Let me just, I'll confirm with you, but I'm sure.
Yeah. Okay.
Okay. Thank you so much, guys. Thank you.
Thank you. Bye.
Okay, now we are at the end. I'm going to do the Bitfunded giveaway, but before we do that, I'm going to say goodbye to our team because we're going to do something a little bit different. I'm going to bring people on. So firstly, thank you guys so much for being here and answering the questions. Really appreciate it. Really, really appreciate it. I'm going to let you all go now so that I can do this giveaway.
Thank you. Good luck, everybody.
Thanks, everybody. See you next week.
Bye, guys.
Bye.